All right. Good morning, ladies and gentlemen. Good morning. Greetings and salutations. How's everybody doing today? Good morning, Bobby T. Nice to see you. Miss Debbie, Chris L. Chris L, I love that green check mark next to your name. Congratulations. Welcome to the family, man. It's nice to have you. Now you're committed. Now we're going to rock it forward every day. I love it. I'm excited. Want to see a lot of pictures from you. When you guys buy software, I want you to start flooding this thing. You too, David and Chef. Gosh, got all the cool kids in here. We got some new folks too. Manprita, nice to see you. Lex Luthor, best name yet. Nice to have you in the classroom. Farzan, great to see you. Guys, my name is Mark, and I am going to take you on this journey to becoming a day trader. And I'm excited about it. I love what I do. And I'm excited to get you guys where you said that you wanted to be. So um, I posted at the top of the room, and I want to just remind you guys, I'm going to change it up a little bit this morning because you know what? Why not? Um, Guys, to minimize your learning curve, and it is a learning curve. Nobody became an engineer in a day. Nobody became a surgeon in a week. Nobody became a professor overnight. It's a learning curve, but posting your pictures in class, guys, this is the key to getting to where you want to be. And when you downloaded the software, Nexgen provided you TechSmith Capture. There is a link just above us that I gave you in here, but just to go through it one more time and make sure that you have it. If you can't find your TechSmith Capture, I want you to go ahead and download it and make sure that you have it up in front of you. And we're going to go through a little lesson today. That's what it looks like when you open it. But guys, posting your pictures in class, every trade, win, lose, or draw. Good morning, David B. Nice to see your smiling face today. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. And I didn't really understand what that meant in the beginning, guys. If you're taking crazy low probability trades just because it's simulator, because it doesn't matter, because you want to see the numbers go up rather than your knowledge, what you're doing is you're teaching your body to take the wrong trades. So we really want you focused on the right trades. But how are you going to know the difference? And to be sure, you need feedback from us, from me. And I am here to help, guys. NextGen offers education live, 15 hours every week. And the only thing you have to do to take advantage of that education process is post pictures and ask questions. And I'm always happy to answer them. And there is no risk or of loss or of capital. If you place the trades on simulator, if you're posting in the room, guys, you can't lose money. All you can do is get smarter. And if you need, and you really need someone to tell you what you did right or wrong. And guys, I do. I very much cover both sides of the coin. I will celebrate all of the victories, but I'll also point out the challenges so that we can grow from them. And this really is the educational magic for next gen users. So I wanted to share that. Like I wanted to start with, let's remind you guys that pictures are how you get to where you want to be. And then when you go back to this is straight in the user guide, guys. Your step-by-step path to becoming a confident trader ASAP is posting your trades in class and using the spreadsheet. And it's a two-part process. The person that posts the most typically makes the most. Um, and let's use TechSmith Capture real quick, especially my new folks. Don't be shy, guys. Shy people get left behind, right? Capture software is the easiest software you're ever going to use. It's a giant red button and it says Capture. If I click on it and hover over just one of my charts, it's going to show me just one of my charts. The idea with NextGen and the education that we're doing is it's a two-part process to find your trades. So I'm going to go to the top left corner of my chart and I'm going to drag it all the way down to the bottom right. I'm going to make sure that I get timestamps in there because we're going to line up what the large chart tells us with what the small chart tells us to find a trade. I'm also going to line up the prices. It allows me to get and see exactly what you're doing, where you're doing it. So when I release the mouse button on Next Gen Capture, it's going to give me this little guy right here. And the option that we're looking for is capture an image. Because when you capture an image, this is how you and I have a conversation. Um, There's a lot of tools at the top here, guys. I want you to use these shape tools, and you can use those maybe to identify entries, maybe to identify termination conditions or targets. You can use the arrows, and this is key. Talk to me about what you see and why you're doing what you're doing. But the most important tool that you can use is this call out button. And all you have to do is click and drag, left click and drag it to the bottom, and it's going to create a text box. And this is where I want you, whoops, to write your rules. Every time you take a trade, I want you to get in the habit of writing your rules on the chart, reaffirming the looks with the words that are associated with it. How did you feel? And oddly enough, this is a very, very strong indicator of where you're at with your understanding of the rules. When you tell me I was nervous, I was confident, I was shaky, right? And if you just have a question, ask your questions via pictures. I love it when you type questions in the room. I like it even more when you post those questions on a picture because what it does is it shows me exactly what you're talking about. Absolutely. So from the text box, David, left click your mouse anywhere on the preview and just drag it down to the right and it'll create the box. Whether you need a small box or a big box, you can change that up. And if you want to, you can change the font to it. You can make it bigger, you can make it smaller. Don't make it too small because I'm old, so I have to be able to read it. But this is really how we're going to have a conversation, guys. And I'm telling you right now, not only will you have the conversation with me on the chart, I'll click on it, I'll look at it. That's what the second half of class is dedicated to. Um, and you'll get it to me by clicking this copy button down here. Once I click copy, it's going to tell me that it's on my clipboard. And I'm going to come to the chat room and I'm going to drop that picture right into the chat room. And this is our conversation piece. We spend the first hour discussing rules. We spend the second half of class looking at your pictures, talking about them, seeing what you did, why you did it, and how we can do it better. And that's really the process for the class. The first hour is all education. And then the second thing you're going to do, and this is what's going to make the spreadsheet so valuable for you. And guys, your spreadsheet is in your Nexgen Study Picks folder. If you type in um, Nexgen 90, it's going to take you to your tracking sheet, but I'm also going to give you a copy of mine in the room so you can do it. But if you click this bottom upload button, and what upload does is it takes that picture and it just throws it into the cloud. And when it goes into the cloud, it gives you a link to screencast. If I copy that link and drop it in the room, it gives me a link to the picture as well as the picture. So guys, I can click on this link as the instructor, and when I do, it's going to open up your picture in my internet browser. And of course, it's going to take a second. I'm going to try it again because it's sleepy. There we go. And up comes the picture that we just did, and now we're going to have a conversation. I'm going to say something clever like, Chef, I noticed that you had your odds favorable momentum and you're clearing the area and you haven't reached the next area and you're looking for the beautiful entry. Great trade, follows the rules, outstanding way to stick to your plan. Or I'm going to say, hey, I noticed that you're trading directly into a termination condition, and that may be the reason that you had some challenges with the trade, but the conversation happens on each picture that you guys post. Where to get screencast? So it's just a part of the process when you sign up. When you sign up for the capture software, let me follow my link real quick. Da, 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 da. I believe it's part of the process, but let's make sure. It's been a while since I've gotten it, Lex. When I go to TechSmith, dun, 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 let's go to Products, Screencast. And it should be free though. So click on the free version. I'm going to get you a link to the free version. Well, it brings me to mine. It brings me to my library. So let's go back one. From here, if you click on the screen version, what it's going to do is it's going to give you it absolutely free. And you're going to be able to, whoops, sorry, that was my Control V that didn't work out. I just did a Shift V. When you sign up for this, what it's going to do, good morning, D-Rock. is it's going to allow you to put those pictures in the cloud, and then that's going to let you share them to the room. It should take just a second. It's absolutely free, but it's going to be amazing for your education. And then let me just click on free version again because it's going to take me directly to mine. Everything that you upload into the cloud, you're going to see, you're going to be able to go back and take a look at, which is pretty cool because that's the second half is going back and using the spreadsheet that Nexgen provides. And I'm going to drop mine in the room so you guys don't have to search for it. You can just click on that, download it, drag it over to your desktop. But your spreadsheet is going to take those pictures, and every time you take a trade, you're going to drop it into this first page on your spreadsheet, and this becomes your trade journal. And your trade journal does a couple things for you. The first thing it does is it's going to allow you to track your progress. It's going to create a library of anything and everything that you've done. But you're going to go back in the morning, guys. So when I look at yesterday's trades, I'm going to study them. I'm going to set aside 5 to 10 minutes every morning. I'm going to sip my coffee and I'm going to ask myself what worked and what didn't work. For example, yesterday in class, there were an awful lot of people that traded into what we call termination conditions, and most of them lost, and one of you got lucky. But that would go under the what didn't work. So what you would do is you would recognize this pattern that seems to be pulling success out of the equation, and then you can wake up, study it, and say, hey, you know what? I'm going to commit to not doing this today. I'm going to really focus on fixing the mistakes that I made yesterday so that I can be a better trader today. You're going to find out what felt easy and what made you nervous. And typically those responses correspond to your ability to follow the rules. But this brief historical study each morning, it's going to prepare you for the day, guys, and it will accelerate the learning. Um, and when you open up your spreadsheet, there's that first page. It's going to, I believe that screencast link is still on here. So I can paste the link to my picture and then start going through the drop downs here, guys. When I got into the trade, I felt nervous because I wasn't sure about the rules, right? And I'm just going through and I'm working through and I'm creating this library of the conditions. And I lost this one. I was nervous and I broke my rules and I lost it, and it's okay to lose every now and then. And I fought the trend and the momentum, right? So I took a loser because I broke my rules, but I wake up in the morning and I say, hey, look, I fought the trend and momentum. Today I'm going to try not to do that. So every time you put something in here, you're going to go back and study it. You're going to be a little bit smarter. The second page is your favorite looks. What's it going to take to get you in the market? Hopefully, it's going to take you the rules being met. So when the rules are met, you can take those pictures, you can drop them into your personal trade setups. This is what it's going to take to get me to pull the trigger, to get into it. And if I click on one of the links, it's an awesome picture of rules being met. You're going to put your pictures of rules being met. And if you're not sure if they're met, then you just post it in the room and we'll have a talk about it. And then finally, on the spreadsheet that I just dropped you guys, this is the work that I've done that I want to share with you. These are pictures that I've taken from class, from Nexgen users throughout this classroom. And these are pictures of their perfect longs. And you'll notice that I put names on them. This is Gary's perfect short. This is Luciano's perfect long. This is what it looks like when Nico needs to take a trade. And guys, the recipe is going to be the same across the board. And it's going to revolve around advantages. So you can come through and you can just take a look at what Nexgen users are doing. There's 250 pictures. And they all share the advantages that I teach in this first hour. And then a lot of people, for whatever reason, want to trade the NASDAQ. The NASDAQ's a little different, so I have a section dedicated to my personal study on the NASDAQ. Learning to manage the trades, there's a section for that. Patterns that occur in the charts, termination conditions, guys. The spreadsheet is just a study guide, but it's an imperative part of becoming a successful trader ASAP. Taking the pictures and then just tracking them, creating a journal with them. We're going to spend the first hour learning the trigger line rules for when it's okay to trade. New users, I'm going to tell you right now, the way I teach is a foundational approach. It is a 100% rules-based approach. It comes from the tutorial section on the education page. and we focus on what's called a high probability trend trade. Let me open up the tutorial section. We focus on a trade for the first hour, guys. We focus on a trade that we call a high probability trade, and it means that every indicator on every chart is going to agree for the trade. Your triggers are going to be the strongest. There will be absolutely nothing in your way, and you're going to understand how to take the perfect entry where the market is most likely to continue. I focus on this high probability trend trade, not because it's the only trade that you should ever take, but because the high probability trend trade is going to teach you how to read your charts. Jerry, mine isn't. The one on the website isn't as complete as mine. There's a copy of mine right there. You need to steal it. You don't need to, Manprita. We've already created it for you. And I just dropped it in the room right above your question. So if you come to this one of the things that we do is I give you everything that you need to be successful. That's part of my goal each and every day. So if you hover over the arrow, it'll allow you to download it. Or if you just kind of left click and drag it, it'll let you pull it off to your desktop. But there's no reason to ever reinvent the wheel, guys. I'm going to give you anything and everything that you need to be successful. And part of what I give you is the high probability trend trade, guys, this foundational approach. This is a trade that's going to teach you to read your charts, and that's the most important skill that you can have as a day trader, is to be able to open up your charts and look at the indicators and understand what they're telling you. And what you're going to understand, and you're really going to probably get this within the first week, is you're going to understand where the market is likely to continue. And you're going to use that continuation spot for high probability trend trades. That's going to be your entry where the market is most likely to continue. You will ultimately understand where the market is likely to go, and this is going to help you a lot in picking your targets, when to hold for larger moves, when to get out of a market because things are changing. And finally, you're going to understand where the market is likely to stop. And brand new users, this is such an important concept. Where the market is likely to stop is what we call a termination condition. And a termination condition may reverse the market. And typically these termination conditions are these Fibonacci areas that the software provides. They are points in the market where the people that are in control, the people that create trends, the people that create momentum, it's where they're having a reaction. It's where they may reverse the market. It's where they may fight one another, buyers and sellers duking it out for supremacy. Um, so we are going to be able to identify and respect these potential termination conditions. They can stop the trend. And then the next thing that they do is they provide the anchor for the highest probability trend trade that you can take. When one of these areas that are likely to stop the market does in fact stop and reverse the market, the trend trade that happens after it is the highest probability, the highest chance of success. It's a trade that typically wins 70 to 80% of the time. This is our focus for the first hour, is that high probability trend trade. And that's what we're going to talk about. We're going to go through it. I'm going to cover the concepts. And then I want to share this as well, because I know that a lot of you are brand new. I share this picture all the time, partially because it makes me laugh, but mostly because I want to be realistic. Your first couple days with Nexgen is very much going to feel like this picture, guys. It's going to feel like you're trying to take a sip of water from a fire hose. There's a lot of information coming at you. But what we do is we break it down incrementally, and we focus on one step at a time. And I liken it to eating an elephant. Learning to read your indicators, learning to recognize this high probability trend trade is like eating an elephant. And if you try to take it all in at once, it's overwhelming. But if you allow it to be a bite at a time, and this is the way that I teach the classroom, one bite at a time, it becomes a very manageable task. So we're going to focus on the highest probability trend trade, and this is going to be the first hour, guys. What I need you to do is simulate. Don't wait until you think you have it down to simulate, guys. Get in and make all the mistakes. Fight all the things that bring you success, but post those pictures in the class, and then each and every attempt that you take becomes an awesome opportunity for education. Because what we want you doing is practicing the correct rules, setting yourself up for long-term success. And then we're going to simplify. I say this word every day. Simple is the way to go, guys. Simple keeps you focused. Simple keeps it from becoming cluttered. If you only have to worry about 4 things, it's pretty easy. If you put yourself in a position to worry about 40 things, it becomes a little overwhelming in the moment. So I teach from a very, very simple standpoint. And we focus on one trade initially. And that trade is the high probability trend trade. This trade only has 3 rules. Each rule is going to provide you an advantage, guys. And it's the advantages that are the recipe for a trade. And we don't look for trades. We look for rules to be met because rules provide advantages. So the high probability trend trade is a mixture of momentum, a clear path, and an entry area. And we're going to identify each separately to create a trade. These 3 rules are going to happen. Let me give you a copy of the rules. I drop a lot of pictures in the room, guys. Steal them. Put them on your computer. These 3 rules are going to happen on only 2 charts. And this blows a lot of people's minds because you're going to see a lot of other people in the room posting more charts. I firmly believe that you can get the job done on only 2, guys. In my own personal trading, I trade 2 charts. I teach with 2 charts. My plan is almost identical to the plan that I teach in this room each and every day. We're going to use a large chart. And this large chart is going to define direction, momentum, and areas, guys. It's going to get 70% of the work done for you. It's a broad stroke of a brush. Your large chart takes 1 bar, only 1 bar to do this, to define direction, to define momentum, to define areas. Your first 2 out of 3 rules happen on this large chart. And when they're true, you will have the advantage of momentum and you will have the advantage of a clear path. When those advantages are present, you'll turn your attention to the smaller chart. And guys, I say it in classroom each and every day. I'm going to have coffee mugs or something with it. But the large chart must lead the way. The large chart must tell you that it's time to look for an entry. And if you reverse the process, you're going to find yourself run over quite a bit. When you have momentum and a clear path, and we're going to talk about how to identify those, you will refine that broad stroke of a brush on a smaller, faster chart. What happens in only 1 bar on the large chart can be refined into 15 to 30 bars on a small chart. And this is where your entry rules take place. This is a chart where I put a big black box around only 1 bar on my large chart. And I want you to see how many bars show up on the smaller, faster chart. This is only an entry chart. And guys, right where that circle is, this becomes your high probability trend trade. You will understand how to refine this look and enter right there, almost at the top of the move up. So a 2 chart process, only 3 rules. New users, please, let it be this easy. Let it be this simple. Don't add rules. Don't add words. Just embrace the idea that trading doesn't have to be overwhelming. It can be pretty easy. And your large chart's going to get everything going with the trend. In order for your rules to be met, you must be trading with the trend for the high probability trend trade. And Nexgen's made it very easy for you. If the background on your largest chart is green, you're in an uptrend and you should only be looking for your rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend and you should only be looking for rules to be met for high probability trend trade short, guys. And this is the easiest lesson that you're ever going to get. Let's go to the live chart. Are we in an uptrend or are we in a downtrend? So you guys that are brand new, Manprita, Lex Luthor, who else is new in here? Uptrend or downtrend? What do you say? It really can be this easy, guys. Nobody? Up. Lex Luthor, perfect. You've already taken the first bite of the elephant. You've identified the trend. Once you identify the trend, rule number 1 says that you must have strong trigger lines. Rule number 1 says strong trigger lines will create the advantage of momentum. So, in that uptrend, this is what strong trigger lines mean. There's 2 parts to your trigger lines, guys. There's the small triggers. These are going to be the solid lines. These are a faster moving indicator. And your large triggers. These are the dashed lines. These work together to do a couple things. When the small triggers break above the large, that's what paints your background green. So even if you're colorblind, when the small triggers are above the large, you know you're in an uptrend. And then when they begin to separate and accelerate away from the large triggers will be wide, they will be angled up, and the space between lets me know that the odds are favorable for the market to continue in the direction of the trend. Good morning, Alan. Odds favorable momentum is something that you're going to hear in the room all day long, guys. You're going to see it annotated on charts. OFM, odds favorable momentum. Because when I have odds favorable momentum on my large chart, this is the most advantageous look for buying a pullback to Fibonacci support on my smallest chart. And on your large chart, you're going to see these tails, these little wicks. We don't trade these tails or wicks, guys. This is literally the pullback on a small chart, and you will be able to pinpoint where the bottom of that tail is most likely to happen. And this will become your entry for the highest probability trend trade. You can see that there's another one here with odds favorable momentum. And then ultimately, those small triggers return to the large triggers. Those strong triggers are no longer strong. The momentum has gone away, and when they work actually inside of the large triggers, we call this a weakening of the large triggers, which means that anything can happen up or down. So strong triggers give you the advantage of momentum, and when they weaken, it becomes a crapshoot. It becomes a coin toss. You don't have the advantage of momentum anymore, and you're going to see this look preceding reversals very often, even without the benefit of Fibonacci. So guys, that's really your best of the best look. And look at this. Small triggers above the large triggers. The large triggers are wide and they're angled up like a shark about to breach. Ladies and gentlemen, this is odds favorable momentum happening in the live market right in front of you. Give me a Y in the room, new users. Let me know. Are you pretty comfortable with that? This is the second bite of the elephant, being able to identify when the market is moving in the direction and is likely to continue. It's not guaranteed to continue, but it has a much better shot than if it has these weak triggers. In a downtrend, it is the exact same look. It's just going the other direction. Your small triggers are now below your large triggers, which paints the background red, lets you know that you're only looking for rules to be met for high probability trend trade short. I don't know what MA are, Manpreet. Moving averages? I believe so. Manpreet, can I give a little admission of guilt for all of you guys? Um, I don't know how they're created. I don't understand the math behind them. I am very much a daydreamer. I was an English lit major. But what I can do is take the looks and translate them into advantages for you. I believe they are moving averages. This is a faster moving average. This is your slower moving average. But what I do know is that when they separate, the odds are favorable for the market to continue in the direction of the trend. And when they separate to the downside, this is my best of the best look for selling Fibonacci resistance on that smaller, faster chart. It's a great question. I'm 99.9% sure that they are moving averages, but it's the looks that I talk about. We're going to keep it simple, right? When I turn the key on my car, I don't care about internal combustion. I just want to hear it go vroom. I want to know that I can step on that little pedal and go buy some groceries. So that's kind of how I teach the class. And yeah, it's a simple look. Odds favorable. And what you're going to find is that it doesn't happen all day. And this is a big part of what we do. 90% of your day will be spent reading your indicators. 90% of your day is just being a chart reader. 10% of your day will be taking the advantages that your chart reading provides and entering a trade. So if we start on the left, there's the odds favorable momentum. And then the triggers weaken and anything can happen. You'll see ACH annotated on people's charts. With these anything can happen triggers, it precedes a reversal, right? We lose the momentum. This is where the sellers are losing steam and the buyers, and typically there's a big blue fib right here. That's where the buyers take over. There's your reversal. They create odds favorable momentum. There's one of those tails. You'll be able to refine that down on a smaller chart to an entry to take you with all the momentum and with the direction. Anything can happen once again. There's your reversal into odds favorable. There's your tail. Next-gen users take advantage of this and they take a trade short, right? Right up to their place where the market is likely to stop. And then here's where patience pays dividends. Here's where rules pays dividends for next-gen users. There will be points during the day where the small and large don't agree. There'll be points where maybe your triggers are red, but your background is green. Your large is up, your small is down. Guys, this is moments of indecision. This is a transition phase. This is where buyers and sellers are fighting for supremacy and they're trying to figure things out. This happens very often at Fibonacci support and resistance. Because rule number one isn't met, because that advantage of momentum isn't present, next-gen users sit on their hands. They incorporate the idea that 90% of what they do is waiting for advantages, and they let these people that move the market fight it out. Ultimately, one of them will win and give you odds favorable momentum. And day trading isn't what you do. A lot of the times it's very much what you don't do. And not getting caught in the fight between the people that move the market is a huge advantage that you guys have. So do me a favor, give me a Y in the room if you recognize it's the separation that creates the momentum. And guys, look, there's one of those tails. And if I circle it, you guys are going to nail this entry pretty soon. Who took this trade? Anybody? And for you new users, I want to show you that the rules are consistent, that the advantages are consistent. Miss Debbie took this trade on a smaller, faster chart because of what her large chart said. Guys, look at that entry. Virtually no risk. Beautiful. And she is already up $262 in this trade on her simple little two lot. She has zero risk. Debbie, thank you for the perfect timing. This is Nexgen in a nutshell. And this is what you will be learning, guys. And this is what you will be practicing. And this is what you will be presenting in class. And we will talk about it each and every day. What an outstanding look. But odds favorable momentum leads the way, ladies and gentlemen. It's going to cover a lot of mistakes. Not that Debbie had any, but it will help cover mistakes. Momentum is the key in what we look for first. Once we have momentum, we have to make sure that the path is clear. We have to make sure that we're not trading into any of those areas that may stop the market. Termination conditions, guys. This is where the people that move the market react. And that's the easiest way that I can describe a termination condition. Let me find my areas picture for you guys. And for you new users, this is an absolutely wonderful key to the map here. This is telling you exactly what you're looking at every time you open up your charts. But the areas that may stop the market, the areas that may reverse the market, first we just identify them as lines on charts. It can be a magenta divergence high. And for my new users, divergence means loss of momentum. And I don't want you to give it any more power than that. If price goes up and the sellers steal the momentum from the buyers, you will see this magenta line form right off the top of the pivot. If the sellers are in control and the buyers just rob them of momentum and the market goes the other way, you will see the cyan line print right off a pivot. When these print, all it means, it's a visual indicator that there was a loss of momentum at that little change of direction. We're also going to look to red Fibonacci resistance, blue Fibonacci support, and these yellow 1-to-1s. Guys, these are all areas that may stop the market, that may reverse the market, that may create an untradeable bounce. And this is why we respect them. And in order to understand whether or not a termination condition is true, whether or not we've lost that clear path, I'm going to go back to the tutorial section here. And I'm going to go to the tops and bottoms section. And it's a two-part process, and I want you to embrace the simplicity once again. When I reference price in this classroom, what I mean is these dynamic Renko bars that you see on your large chart, that you see on your small chart. These are nothing more than a reflection of price. It's a visual of where price is trading. Price goes up and down all day long. And when these dynamic Renko bars, when price reaches an area, and this is the first part of the equation, and guys, please write it down on a piece of paper. Price reaches an area. That's the key to determining these termination conditions. These dynamic Renko bars come down, and they smack into Fibonacci support. This is where we have to understand that there is a potential reaction. The buyers may take over and the market may go up. The buyers and sellers may fight. and the market may consolidate and go crazy for a minute, or the area may simply break, clearing the path for us once again. So when price reaches an area, in this case support, if all of your trigger lines remain above that area support, the small and the large, this is an area that may stop the market. This is a textbook termination condition. And guys, termination conditions remove the advantage of a clear path. And the market's been in a huge down move today. But I want you to see it right here. The dynamic Renko bars came down and reached Fibonacci support. All of the trigger lines remained above the area, therefore, support is likely to stop the market. It's likely to create a reaction that's untradeable to the downside. It may create consolidation from fights between buyers and sellers. But the recipe is the same every time price reaches an area. If price gets there and the triggers remain above support, or if price pulls back and the triggers remain below resistance, termination condition is true. Price retraces back to support. Here we see it live in the market. All of the trigger lines are above this area of support. Nexgen users know not to take a short trade into that area because it may create a bounce or it may reverse the market. It may continue that move up. We're just not sure. So we do nothing in the moment because 90% of what we do is sitting on our hands and waiting for advantages. Guys, give me a why in the room. If the simple little recipe, price reaches, where are my triggers? We're going to do that every day. Price reaches, where are my triggers? You're going to say it to yourself. Every time you open a chart, you're going to say, where is price? Has it reached an area? Where are my triggers? D-Rock, I know you have it. Thank you for saying yes. Guys, if you don't understand it, it's okay. I didn't understand it on the first day, and I'm going to tell you the truth. Termination conditions escaped me for about 3 months because I refused to study them. But here's a great idea to keep it simple. If price reaches the area and no triggers are through, the area is not broken. There is no clear path. So when is the path clear? When both your small triggers and your large triggers break through the area. They get above this area of resistance. We consider that area to be broken. And when an area is broken, the path is now clear. And then I put the question on there, what if you insisted on a clear path? Would it make your trading more profitable? I don't think there's anyone in this room that would say, nope, that would never help out, Mark, because it will. It helps enormously. So price reaches the area, no triggers, no trade. Both triggers, the path is clear. And if we go back to our picture from the user guide, no short trades. And then up here, price reaches resistance or support in the moment. Both the small and the large triggers get to the other side of support. It begins to behave as resistance. Now the path is clear. And you'll notice that we have that odds favorable momentum that we learned about in rule number 1. This market is likely to continue in the direction of the trend. And there's one of those pullbacks and one of those tails. And it smacks right in to what used to be support until it broke. And now it's resistance. Next-gen users are going to find their entries right at the top of this tail. And the momentum carries it to that point where the market is likely to go. Fibonacci support. Next-gen users are exiting right at this area because it may stop the market. This is your recipe for terminations. Trigger lines will break through areas. Here we have one of those pivots where momentum was lost. And guys, this pivot doesn't show you the loss of momentum until about the third bar, which is why the line on its own is not a termination condition. It's when we go through the recipe. Price reaches that divergence low. All of the trigger lines remain above. Now we have what we call a termination condition, an area that may stop the market. If a termination condition creates a reversal in the market, guys, we're going to label that a strong bottom in this case. A strong bottom is the precursor for the highest probability trend trade that you can take. So the line is formed, but it's not until price reaches that line and the triggers stay above that it becomes a termination condition. We call this a pivot stop out. We can use those losses of momentum, and this is what we call a pivot stop out, guys. And a pivot stop out of a prior divergence line is a termination condition that can reverse the market. That pivot stop out becomes even more powerful if it corresponds with Fibonacci resistance or support. This is the picture reminding you that 90% of your day is spent waiting for advantages, guys. You do not have to be in every move of the market. Sometimes it simply isn't your money. Price reaches resistance, and all of my trigger lines remain below. Therefore, my rules say I'm not looking for any more long trades, not in the moment. From resistance, price pulls all the way back down to support. All of my trigger lines remain above support. I'm not looking for short trades. And this is where new users start to say, but Mark, how the hell am I going to make money if I can't go long and I can't go short? This is where you exercise your patience piece. Price comes back and it retests that resistance. Two forms of resistance and a divergence high, and your trigger lines remain below. Guys, we know that we're not going long into the area, but now what we have is a termination condition, a pivot stop out of a divergence high that happens with Fibonacci resistance. It creates a full reversal. You get odds favorable momentum, and I'll be darned, there's one of those tails. That's the highest probability trend trade that you can take. And if you were patient to wait for the buyers and sellers to finish fighting it out, that's your best of the best, and that's how Nexgen users get paid. We don't get paid catching every turn of the market. We get paid when these guys give us the advantages, when the people that move the market give us odds favorable momentum and a clear path. So I'm going to ask again as we get a little bit deeper into it. Brand new users, Manprita, Lex Luthor, M. If price reaches one of these areas, fibs, yellow one-to-ones, divergence lows. Good morning, PFI. Price reaches and no triggers get through the area. This is a termination condition. It may reverse the market. It may stop the market. It may create a bounce. It may create a fight between buyers and sellers. These are reaction areas, guys. The sellers are in control. And they're pushing with odds favorable momentum all the way to that key indicator, that key area. Decisions are being made. The buyers want the market to go up. The sellers still want it to go down. The buyers aren't ready to give it up. The sellers aren't either. And you see this consolidation. You see trigger lines that don't line, guys. All because price reached the area, that key point in the market. Ultimately, the buyers win. And when they win, they create odds favorable momentum. The trigger lines get above resistance. It acts as support. And once again, next-gen users, this is where you're going to capitalize. This is where you're going to pinpoint that area where the market is likely to continue. And once you pinpoint that area, your target is off in the distance, that point where the market is likely to go. And this is where we're going to capitalize. We're going to capitalize on the hard work of the buyers and sellers, the people with the deep pockets. And we're going to wait for our shot. We're going to wait for our advantages. Is everybody comfortable with termination conditions? I mean, not to the point to where you just start nailing them every day, right? But the idea that if I go to the live market and if price reaches an area, I have to be patient for just a second. I have to wait and see how it's going to react. Is it going to break? Is it going to hold? Because I don't know, and you have to be okay with the idea that you don't know. Sometimes price turns from nowhere. Sometimes you have a clear path, and it just goes up all of a sudden on your large chart. And then sometimes you have odds favorable momentum in a clear path, and the market just turns. We're not in control of that. But this final termination condition is the only termination condition that I give any credit on a small chart. And it's three divergences in the same price range, three losses of momentum in the same price range. You know that there was a loss of momentum because the cyan line prints. Three of them may turn the market. Three of them, with anything can happen triggers, is even more powerful and is more likely to turn the market. Three losses of momentum where your third pivot is higher than the previous from a low or lower than the previous from a high. That's a head and shoulders pattern for you technical reader guys. Is even more powerful still. You will see these three divergences at a low, these three divergences at a high on your smaller, faster chart. at times like this, where the large chart seems to be turning from nowhere, guys, because your large chart is a broad stroke of a brush. It's a slower chart. This helps you identify that change in the moment. And that's termination conditions. And termination conditions happen on the large chart. And termination conditions either give you a clear path or they don't. Can I get a Y from everybody if you're comfortable with the simple recipe? There's only three options. Price reaches, no triggers, no clear path. Sit on your hands for a minute. Let's see what the market does. Both small and large get to the other side of the area. Let's look for those trade rules to be met again. We have that clear path. And then there's one final look that I want to give you guys. The idea is that you stay focused on a high probability trend trade, but I'm pretty realistic, guys. The average user doesn't want to take 3 to 4 trades, 5 trades, even if they do win 80% of the time. They want more action. So areas always have the potential to break. If they didn't, we'd be stuck between two fibs forever, right? And it would just look like a Pong game. So when does an area have the potential to break? When your small triggers smash through an area. When your small triggers get to the other side of resistance with odds favorable momentum. And guys, it's key that that momentum is there. Strong triggers break areas. Strong triggers break through fibs. Odds favorable momentum. The smalls get above and the large don't. Guys, we call this a 50-50 look in the classroom. Not because of your chance of success if you take a trade, but 50-50 because 50% of your triggers have made it through the area and 50% have not. And we know that it takes 100% to break an area. So this is an area with the potential to break, but it's not broken, which means that it's not a clear path. Sometimes they break, sometimes they don't. You can see down here, ultimately, it didn't break. The triggers never got to the other side. Next-gen users never looked for a short trade. Here, both small and large break through, guys. So we're going to talk about a trade where you can take a trend trade when it has the potential to break, but I want you to understand that it will never be considered a high probability trend trade because you forfeit the advantage of a clear path. And you're going to see it throughout the day, and you're going to see a lot of those trades posted in the room. And I'm going to give you a plan for taking them that gives you the best chance of success. But we're going to stay focused on that high probability trend trade first. We're going to stay focused on the best of the best first. And we have the advantage of momentum because the large chart had strong triggers. We have the advantage of a clear path because there's nothing in our way. So now we're going to define where the market is most likely to continue. And guys, this is freaking magical. I'm not going to lie. We are going to identify it, and it's going to be so precise that we're going to use a limit order. We're going to wait for the market to come to us. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That's the recipe for an entry. Yikes, I lost my pictures. And I want to show you why we do that before I actually go into identifying the rules. Because your large chart is the large crowd. The large chart represents the opinion of the people that move the market. These are the people that have created the trend. These are the people that have provided you the luxury of momentum. These are the people that are and are not reacting to Fibonacci, and they're the people that are giving you the clear path. The large chart typically wins. The large chart leads the way. Your small chart, your refinement chart, caters to the yahoos that want to fight trend and momentum, right? And we rely on this small crowd to give us this pushback, but we anticipate that the large chart will win. We anticipate that the large crowd will win. So the small crowd is going to get us back to our best of the best area, and they're going to do that with a retracement, a small little push in price that's counter to the underlying trend. Rule number 3 is designed to have you identify where that retracement is most likely to happen, and that's right where those tails form. And this will be the look on your small chart. When the large chart is in an uptrend, when the large chart has momentum, when the large chart has a clear path, your small chart is going to be screaming to the upside. You should have odds favorable momentum. You should have that same look where the small triggers are above the large triggers and there's space between the two. And then The rule says that we are going to take that pullback. We're going to trade that pullback at an area inside of favorable large triggers. So we're going to define two things. High probability trend trades happen from lines. The lines may be fibs, mid bands, and yellow one-to-ones. Every high probability trend trade originates at an area. And the key is that those areas fall inside of favorable large triggers. And favorable large triggers mean that your large triggers, those smooth dashed lines, and your synthetic triggers on the smaller, faster chart, those kind of stepped lines. These are just the large triggers from your higher time frame. But when we overlap them on a smaller, faster chart, when they are one on top of the other, it's going to create your smallest window of opportunity. And the window of opportunity is where that market is likely to continue. When they're one on top of the other, this is going to produce the absolute least amount of risk for next-gen users because the area where the market is likely to continue is very, very consolidated inside of favorable large triggers. So I want you to embrace the idea that these triggers should be one on top of the other to create the advantage. And all we have to do is pinpoint where the market is most likely to continue. And we're going to do that when the small crowd begins to take over. And you're going to see a reversal bar on your large or on your small chart. You'll never see it on your large chart. Your large chart is screaming up. It'll be one bar. We're going to get this reversal bar on a small chart. And this is where it's time to identify that window of opportunity. The window of opportunity consists of the areas inside of favorable large triggers. For a long trade, your window of opportunity, I'm going to show you this picture, will extend from your highest point of support, which means the area closest to price, to the lowest point of support, the area furthest from price, inside of favorable large triggers. They're right there in the belly of the beast, right? The large triggers are strong, they're overlapping. We look from the highest point of support to the lowest point of support inside of favorable large triggers. This becomes your window of opportunity, and it's inside of this little shaded area where the market is most likely to continue. And you will activate a limit order at the top of the window, a tick or two above that highest point of support, because of the momentum on the large chart, because there's no lines on the large chart to create a bounce. In a downtrend, it's the same thing. The reversal bar will come up. You'll look for your favorable large triggers, and you're going to identify the areas that fall within. In this case, there was only a mid-band, and look how the market bounces right off of that area of resistance and continues in the direction of the trend. You will be able to pinpoint this area, guys. You're just going to have to learn to identify the window of opportunity. So when this reversal bar happens, we're going to look for our favorable large triggers. We're going to identify the areas that fall within, and you can draw a box with a drawing tool. This becomes the area where the market is most likely to continue. And before the market ever gets to that area, you'll activate a limit order right at that highest point of support, right inside of favorable large triggers, and this becomes your entry for the highest probability trend trade. And in a perfect world, this is what it looks like. And this is where I want to remind you people that you're not, you people, that sounds horrible. I want to remind everybody in here, we're not in control of whether or not it comes back, right? We're not in control of creating the momentum. We're not in control of whether the market reverses or bounces or breaks. The only thing that the next-gen user is ever 100% in control of is whether or not your rules are met. And your rules provide a statistical advantage. Your rules provide a trade that has been proven through study and back testing and real-time trading to win between 70 and 80% of the time. So your first 20 days with Nexgen, Manprita, Lex Luthor, your first 20 days with Nexgen should be dedicated to entering the market where it's most likely to continue, understanding those great entries because they create manageable trades. At the time of the reversal bar, I'm going to look for my favorable large triggers. And when I do that, it creates this huge black box. Guys, that's a huge window. But you'll be able to refine it even more. You know that you're looking inside a favorable large trigger. So let's create a window from the highest point of support to the lowest point of support. And this becomes the area where the market is most likely to continue. Next-gen users, you will activate a limit order at the top of that window. And you'll be patient. At this point, it's out of your hands. Can I get a why from my newer folks? This is where the trades originate, the high probability trend trade. It's like drinking from a fire hose, I know. You guys are going to activate a limit order right at the top. And guys, you have to practice this, right? Day one, you're not going to be great at this. Day two, you're going to be better. By day five, you're going to start to see these. And the idea of your demo isn't to become a professional day trader in 10 days. It's to understand that the methodology does work, right? And that I am here every step of the way to teach it. The market is coming back and it reaches your limit order and you're now in a long position. You're in a long position with the advantage of momentum. You're in a long position with the advantage of a clear path, and you're in a long position with that entry area from inside of favorable large triggers where the market is most likely to continue. For my brand new users, this is the recipe for a trade. We created a window, which means that the market may go to the bottom of that window, right? We don't know. All we've done is identified where the market is most likely to continue. New users get scared and they jump ship. Oh my gosh, this trade's going against me a couple ticks. I better get out because it's probably going to be a loser. Fear takes over before trust is developed. You're still in the window where the market is likely to go, and guys, it's not uncommon for that to be your bounce point. But because of the momentum on the large chart, we're going to enter at the top and we're going to be willing to sit through that. Now, here's the part that brand new users forget. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, I'm never going to tell you that you're going to win every trade. This is a cost of doing business, right? The market is wrong. Whatever you want to call it, whatever makes you feel better. But small losses are a normal, natural part of a positive equity curve. But Nexgen users, you have the ability to manage risk before you ever manage profit. You're managing risk through odds favorable momentum. You're managing risk through not trading into areas that may reverse the market. You're managing risk by entering where the market is most likely to continue, and you're managing it even further by placing a protective stop beyond that window of opportunity where the market shouldn't go. You will take losers, you will get stopped out, but if you're following the recipe and embracing the advantages, you've taken a trade that typically wins 70 to 80% of the time. It's imperative that you post these in the room because a lot of people associate losers with failure. If you follow the rules, it's a huge success. It just didn't work. Guys, this is a trade that I will take 1,000 out of 1,000 times. I will never miss the high probability trend trade when I'm trading the market because 70 to 80% of the time, this is my reaction. Profit target reached. When the market begins to move in the direction of the trade, I'm going to reduce my risk below that reversal bar. I manage my risk even further. Because I can see Fibonacci off in the distance and gauge the momentum, I'm going to be able to take intelligent profits. I'm going to be able to understand where the market is likely to go and get paid at those key areas. Because I wait for the pullback to the area inside of favorable large triggers, my risk is minimized, but my profit potential is maximized. In new users, you're going to see these fluctuations on a smaller, faster chart. Don't let your fear of missing out get you in at the top of a bar that you hoped would go. Make sure that your entries are pragmatic and mechanical, getting in at the area where the market is most likely to continue. It's going to take you a little bit of study, a little bit of time, but eventually, do you see how Miss Debbie's chart had odds favorable momentum in an uptrend and we hadn't reached that fib above us? And sure enough, she enters on the pullback to the area inside of favorable large triggers. Guys, this is absolute textbook. This is what I teach every morning. This is what you need to study to become comfortable with. You can study it by going back historically and looking for these tails with odds favorable momentum and a clear path and simply circle them. And if you circle them and they line up with support or resistance inside of favorable large triggers, you know that you have a high probability trend trade. You're beginning to create recognition through repetition. Guys, take that picture, put it in your spreadsheet, burn that image into your brain. Put it in the class and ask, Mark, was this in fact a high probability trend trade? And what you're doing is you're learning the trigger looks, the Fibonacci looks, so the trade becomes easy, guys. And this is your study. This is where you have to get some work done to become comfortable with the trades. So if we go to the live market, look how the circle on the tail, whoops, lines up with an area of support inside of favorable large triggers. Let's see. Here, price reached support, but my trigger lines are above. Guys, that's a termination condition. I'm not taking this trade as a new user, not yet. But right here, this bar hasn't reached Fibonacci support yet. It came close, but it didn't make it. Let's see what the tail looks like. There's a mid-band right inside of those large triggers. It's not the best look, but it certainly is a look, and it is potentially a trade. And then you're going to see this happen over and over and over, guys. And this look repeats itself on every market. So all you have to do is get comfortable with it. Get to the point to where you can recognize it in the moment. Get to the point to where odds favorable momentum becomes the basis of everything that you do. A clear path becomes the most important part of what you're trading. Look at this divergence high, just a loss of momentum. Look at how price reaches it to the tick. If you don't think that these are important, stopped it on a dime. It's not guaranteed to stop it, but guys, it took away your clear path, which means that you didn't try a long trade, which means you didn't get stopped out. This is into a termination, but let's see if the pattern holds true. At 8:58 a.m. Price pulls right back to support right there at those favorable large triggers. Over and over, guys. All you're worried about for your first 30 days is taking great entries. All you're worried about is focusing on advantages. Is everybody comfortable so far? Even if you don't feel perfect with it, because you're not going to on the first day. Advantages create trades. Trades aren't looked for, advantages are looked for, right? We're not looking for a trend trade. We're looking for rules being met for a trend trade because rules provide a statistical advantage. Here's your elephant eating. Has anyone in the room other than me had to lose weight at some point because maybe it got a little out of control in your 30s and you said to yourself, I'm going to lose 50 pounds? And you're like, oh my gosh, losing 50 pounds is an overwhelming concept. That's a lot of weight to lose, right? But guys, what if you lose a pound a week? 1 pound every week. At the end of the year, haven't you reached your goal? At the end of the year, aren't you 52 pounds lighter? Absolutely you are. In some weeks, you may not lose a pound. In some weeks, you may lose two. But the idea is make it manageable, guys. So brand new users, you all nailed the trend. Day one, within the first hour of class, you were able to identify whether the market was going up or down. I'm comfortable and confident saying that you're pretty good, that if the separation on the triggers is present, that the momentum is advantageous, right? That's the second bite. That's your second thing to look at. And then the study becomes a little more important as you begin to recognize termination conditions. You have the recipe, but you have to kind of recognize it in the moment, and that's going to take a little seat time, little trigger time to get you comfortable with termination conditions. And then you're going to piece those together and you're going to learn to enter the market, guys. And this is your focus for 20 days. Taking this simple idea of a foundational approach and getting in the market at the correct spot. I'm giving you a high probability trend trade checklist to help police yourself, to remind you of what these advantages are. I'm dropping it in the room right now. Brand new users, I want you to steal this and I want you to print it out and put it on your desktop. These are the same rules that I want you to type on your chart when you annotate, when you're looking for these trades, because what you're going to do is your annotations are going to identify your rules. This is my odds favorable momentum. Let me draw a line to it. This was a termination condition. Let me draw a line to it and reinforce the idea of what a termination condition looks like. This was my pullback to support inside of favorable large triggers. By using the words, you reinforce the lessons. Let me give you this. This is your how-to. This is how to have the best conversation with me, guys. And then, one step beyond the checklist, I'm giving you the exact same checklist. but I've liberated pictures from the resource materials because some of us are visual learners. I'm very much a visual learner. Is the market coming from a good top or bottom? This is the first one on the checklist. And guys, it's not imperative. You can still have a great trade without a good top or bottom, but you're going to have to look on your smaller chart to manage it with those three potential divergences. But all it is a termination that creates a full reversal. And if you have it, you have a strong top or bottom. I'm going to give you guys the link. It's right there in the spreadsheet as well. This is John Novak talking about tops and bottoms, talking about termination conditions, when areas are breaking, when they're likely to break, and when they haven't. This is a great watch for brand new users to really help solidify the concept of terminations. Your next part on the checklist is, do I have odds favorable momentum? Here's a picture of it to the upside. Here's a picture of it to the downside. And guys, here's that amazing reminder that when the small triggers are inside of the large triggers, anything can happen up or down. If I start my day looking at this picture, I know what I'm looking for. Here's your termination conditions. When is the path not broken? When do we consider it broken? And then guys, here's identifying the window of opportunity. The whole process from reversal bar to identifying the window, where your entry goes, and reminding you that areas outside of favorable large triggers are not a part of that window of opportunity. So there is two checklists, one to print out and put on your desktop, one to study a little bit in the moment. And then here's the most important part for new traders, guys. You have to have a plan. You have to have a plan of attack. Emotional trading will drain your account, right? Hopeful trading will drain your account. Not having a statistical advantage each and every time you enter the market is just a disservice. You're shooting yourself in the foot, guys. So this plan that I'm giving you right now is a stepping stone. This is not the end all be all. You're going to see people taking trades that don't even resemble this plan. But for the brand new user, this is a stepping stone in your learning journey, and it's designed to optimize your chances of success with that high probability trend trade. And with that 50-50 trade, that one area not quite broken but has the potential to break trade, I've given you rules for that as well. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. What does that mean? That was John Novak using AI to make it sound fancy. That means that the quicker you learn to read your indicators, the better you can read your indicators, the more opportunities you're going to recognize, the more patterns you're going to recognize, the easier it becomes to break away from that high probability trend trade. You're going to know your rules like the back of your hand, which means that you're going to be able to break your rules every now and then because you're going to understand the advantages that are present and you'll be able to react to the ones that maybe are not. So this is your basis, guys. This is a simple plan for consistency for the brand new user. And notice what the biggest, boldest underline is. Never fight the large chart direction or triggers. This is going to eliminate at least 50% of the new user problems. This is going to keep you from taking trades based on hope. This is going to keep you focused on trading with everything that the large crowd said was supposed to happen. All you're doing for 20 days is defining your entry, guys. Here's that checklist once again. This is exactly what my high probability trend trade looks like. Here's a picture of my short entry. I want you to start collecting pictures of the rules met. Here's my odds favorable momentum. Here's my clear path. There's my entry inside of favorable large triggers. Guys, this was a Nexgen user. I stole my Nexgen user's picture. What's it look like going the other way? Some people don't see longs or shorts. They only see one side of the coin. But there's that odds favorable momentum. There's that clear path. And there's that entry right at support inside of favorable large triggers. This is what it should look like each and every time I take the trade, guys. This is the beginning of your journey. 20 days getting in at the right spot. Why? Because great entries create manageable trades. I'm going to trademark that phrase. So the same way that your entries are mechanical, the same way that your entries are methodical, they're pragmatic, they're void of opinion and emotion, for the brand new user, an approach to management as you learn to read your indicators tends to be the most straightforward approach. So your initial stop goes outside of the window of opportunity, guys. Everything is predicated by the great entry at resistance inside of favorable large triggers. And your protective stop will go where the market shouldn't. And I'm going to repeat that losses are a part of a positive equity curve. Losses are going to happen, and anything that wins 70 to 80% of the time is obligated to hit that stop. After you take your great entry, it's out of your hands. You're going to do nothing. You're going to put them over your head. You're going to slide your chair 6 feet back, and you're either going to get stopped out of the trade, and that's okay. You're going to take your picture. You're going to write your rules on it. You're going to present it in class, or the market's going to provide you a reversal bar in the direction of your trade. And if it does, you're going to manage your risk even further. You're going to reduce your risk 2 ticks above that reversal bar. And at this point, there's nothing to do. Once again, if I get a reversal bar, then I reduce my risk. And at this point, there's nothing to do. I either get stopped out for an even smaller loss, which is outstanding, or the market's going to go to my first target. And for you guys with experience, this first target bugs you. Only $100. I'm only looking to take $100 on this trade. And you're like, but Mark, I can't justify the risk. I can't justify the reward. It doesn't make sense. Guys, I want you to do this as you learn to read your charts. When you have the advantage of momentum, when you have the advantage of a clear path, and when you have the advantage of an entry area, the odds of you hitting that first target go up exponentially. And if you reach that first target of $100, you're going to hear NinjaTrader tell you that the target is reached. You're going to feel elation. You're going to be happy. You just got paid. Your palms are going to dry up a little bit. Your pulse is going to drop a little bit, right? You're going to roll back towards your screen. This is success, guys, and confidence comes from the memory of success. And now you're feeling confident. You've taken $100 and nobody can take that from you, and you're going to move your stop to break even. You have nothing to lose, money in your pocket, and the whole reason that we do that is because it makes it easier for the new user as they learn to read their charts to remember that the large chart leads the way, that the large chart gave you momentum and a clear path, that the large chart says this market is most likely to scream down in the direction of the trade, which makes it easier for you to hold for the second target. You have nothing to lose and you've been paid, and it's absolutely picture perfect. And one of two things are going to happen. You're either going to get stopped out, break even, and I'm going to tell you guys right now, there's going to be a lot of break evens in the beginning as you learn to read your indicators, or it's going to hit your second target. And if it hits your second target, guys, that's a $300 trade. And it's funny how our brains don't respect $100, but $300, we're like, oh, that's amazing, right? And if you make $300 a day, what a horribly low projection. You make $1,500 a week, guys. That's a $6,000 month, which puts you at a $72,000 year. And I'm not going to lie. That's not a bad year for a couple minutes of work. Second target on the next fib on a 50-50 as opposed to the high probability trend trade at 200. Do I have that? Let me ask the question first, D-Rock. New users, is everybody okay with this? Can we keep it simple for just a little bit while we learn to read the charts? I know you don't want to. I know you want to find all the trades. I know that you want to be in every move. I know that you want to be a part of everything that's happening. But let it be simple at first. And let this trade take you to that 50-50 trade that D-Rock's asking about. And it's the same thing. It's a checklist designed to get you in. And since I don't have a clear path, I'm insisting on momentum, and I'm insisting on no divergence, no loss of momentum. And I'm making sure that it's from a termination, guys. And the rules change for entry when the path isn't clear. And it reminds me that if there's a loss of momentum on my smaller, faster chart, no trade. Sit it out. Management is the same thing. My initial stop is outside of the window of opportunity. I'm using the reversal bar to reduce my risk. And I'm reminding myself that if divergence prints when I'm in the trade, I'm exiting the trade. $100 first contract or at the first trouble spot, whichever is first. Your chart reading will identify the trouble spots. D-Rock, check it out. $200 second contract. For the brand new user, this isn't a home run. So on the 50-50, I'm taking my first target at the first trouble spot. That's okay. That's why we talk about it, right? Don't ever be sorry in my classroom. So here's a 50-50 trade. The small triggers are through, the large triggers are not. It has the potential to break, but I'm just not sure. Guys, my money is worth a perfect entry. No divergence, strong triggers, small window of opportunity. It looks exactly like a high probability trend trade, except I don't have a clear path. And D-Rock, here's where it changes for the brand new user. It says take your first profits at $100 or the first trouble spot. My trouble spot is this fib that hasn't broken yet. My trouble spot is this area that I'm hoping breaks, right? Which means that my first profit target happens right here. To be honest with you, $100 is right here. I could have already been paid at $100 into that trade. But this is where the market's likely to bounce, where it's likely to have a reaction. So this is where my first profit target happens. And if it's short of $100, I have to accept that. 50-50 trades typically aren't home run trades in the beginning, guys. They're taking advantage of an area that has the potential to break. They're insisting on the absolute best entry. And you're getting in and getting out, and your chart reading is going to allow you to manage them. Your chart reading is going to allow you to take quick profits to get to zero loss. Here it is going to the upside. 50-50 trade, no divergence. Strong triggers, small window of opportunity. Notice how this trade comes off at the first sign of trouble. So kind of the same thing. So it's okay to read it wrong. And D-Rock, you're going to change your plan. Guys, this is designed to get you success, optimize your chances of success with two simple trades as a brand new user. High probability in the first 50-50. It's your simulation, study, class feedback, and practice that's going to change your plan, that's going to have you looking for different things, that's going to have you managing trades better. And the more you post in the room, the quicker you're going to get to your personal plan. This is a generic. When you develop your plan, I'm giving you the same template. I'm dropping it in the room. This is how you create your plan, guys. You're going to always define your entry. And everything revolves around pictures of the absolute best of the best. Pictures create recognition. Recognition creates confidence, trust. And this is the first half of class. This is what we do every day, Monday through Friday. We talk about rules, we talk about advantages, we talk about a high probability trend trade. The second 2 hours of class, the second hour and a half, revolves around the pictures that you post. Stopping, taking a look at the live market, seeing if the rules are met, right? Seeing if we have odds favorable momentum, if we have no terminations, and I'll be darned if there was a pullback to an area of resistance right inside of favorable large triggers. And now we're beginning to lose momentum, and look at how the market begins to pull back up. Guys, your job is to find this trade, to take this trade, to trust this trade, and to nail this entry. And when this reversal bar prints, let's go through an entry. What do you say? When everything is down, your market's going down. This is for you brand new users. We wait for a reversal bar on the smaller, faster chart. At the time of the reversal bar, from the lowest point of the large triggers to the highest point of the large triggers, this is where I'm looking for areas. This is where it's likely to continue, the areas that fall within. All you have to do as a brand new user is activate a limit order a couple ticks below that area. This midband's a moving average. It's coming down. So the market comes up and it smacks right into your entry, guys. This is your trade. This is the best of the best. This is the entry that I want you focused on for 20 days. What happens? We're in at 48. There's a reversal bar. My initial risk was here where the market shouldn't go, only about 70 bucks worth of risk. But because I pinpointed the entry, 2 ticks above, guys, I'm like at 51. I've got 3 ticks of risk, $30 worth of risk on this trade. And now I'm in it. From 48 to 38, that's $100. So I move my stop to break even as a brand new user. I've already been paid $100. And look what happens. I'm out of the trade, $100 in my pocket. As you grow with the software, as you learn to read it, you're going to say to yourself, I have every advantage. I'm going to take $100, but I'm going to keep a little risk on the trade, right? I'm going to get where the market shouldn't go. And because of this momentum direction coming from a termination, I'm going to give this trade an opportunity to run a little bit. And I'm not going to get caught up on my small chart because two divergences don't change it. Two divergences aren't an exit condition for a high probability trend trade. And I'm going to hold on to it. Initially, I will. D-Rock, because if I put my stop break even, ultimately, as I grow with the software, brand new user, go break even, get paid, get the hell out, right? But D-Rock, when your large chart looks like this, isn't it likely to continue in the direction of the trade? So does it make sense to leave a little risk on the trade for your second contract for your runner? Ultimately, it will. Ultimately, your chart read, I don't think on this trade I would have moved my stop in my own personal trading until the market was down here. I might go break even down here when the triggers start to weaken. But to be honest with you, I'm not moving it from above that reversal bar, from above that pivot. Three ticks, $30 is worth it to me with this look on my large chart because the large chart leads the way. And then the market continues down with all that momentum. And look how the momentum is going away. Just looking at the large chart, look at how they return. And that's what gives us a little push up, right to Fibonacci resistance. And this is where we're at right now. And you didn't have any indication, right? You didn't have any indication. There weren't three divergences. There was really nothing to say that the market was going to do this. And guys, this reminds you that you're not in control. D-Rock, you're not in control. So as a new user, though, you get stopped out break even. As someone that's learned to grow a little bit more, you keep a little risk. Maybe you take $200. And then eventually, you start holding for bigger moves. Guys, it's a process. Now I have smalls through the area, but the larger not. You have a blue fib at 90.25? Heck yeah. How many days back, Tony? Guys, we're not always going to line up. I am 10 days back. Maybe you are too. You're 9 days back. So our software's taking different information, isn't it? This happened yesterday too. Someone was 11 instead of 10. So always remember, guys, trade your charts. Tony, 9 was the winner here, wasn't it? I didn't have that information. So yay. So that means that we have a good bottom creating a full reversal on Tony's chart. I have odds favorable momentum. I have a chart with the potential to break. And I have an area right at the top of those triggers. Guys, this is what we call a 50-50 trade. This is a trade that may continue, but the areas aren't broken. I don't have divergence. I do have strong triggers. And my window of opportunity is this big. From my highest point of support to the lowest point of support. Guys, give me a Y if you see it. If you had the fib, there it is. I just have a pivot from absolutely nowhere. Which means that if I'm following the simple plan, that's not my trade. Tony's got a termination condition there because he's 9 days. He's got a little different tweak on his software. Do you guys want to see what happens on a medium probability trade? I right click. Look how I'm waiting for the market to come to me. It's not a high probability trend trade. I've got 4 areas that aren't broken. But this is what entries look like. In at the area, stop outside of the triggers where the market shouldn't go, $100, $200. All I want to see from new users is that entry at an area inside of favorable large triggers. I want to see you getting in where the market is most likely to continue. And then don't worry about anything. Keep it pragmatic. If then, if I get a reversal bar, well, then I'll move my stop. Otherwise, I'm doing nothing. And it may be a cost of doing business. Give me a why if you're with me. You just saw the process. But it's imperative that I say, guys, this is 4 areas that aren't broken. This isn't, this is, we are hoping that this momentum can get through these fibs, but there's 4 areas of concern, which means that the likelihood goes down dramatically. And you're going to see these fluctuations. They're blank. Are you connected, Lex? Are they just gray? Can you actually, let's do this. Can you post a picture of your charts for me? And let's see if we can walk you through a couple fixes potentially. And guys, I'm not the tech guy. I'm definitely not, but sometimes I can help. Sometimes there's problems that that I can fix here in the classroom, and if not, we have the best tech department ever. Guys, I think the most important thing that I want you to realize is that this is 4 areas that aren't broken. Is everybody comfortable with that? 4 areas that aren't broken, guys. This falls so far outside of high probability. And we're kind of getting exactly what we think. 1, 2, 3, 4 areas not broken. I'm not coming from a termination condition. This isn't a trade that I would take in real life, guys, but I wanted to show you, and who cares what happens next? I wanted to show you that for your first 20 days, identifying that area inside of favorable large triggers is exactly what you're looking for. Because once you can do this, everything else tends to work out a little bit better. So Lex, if you're gray and not working, can you see any bars at all? Termination condition to the tick. No bars even? Do you have in the upper right-hand corner a white arrow or an F? And gray is typically bad. Gray means that something's afoot there. Something's going a little silly with it. I'm going to give you the link real quick to tech support. Jason can fix most problems in a matter of seconds, a matter of minutes. He'll jump on, take care of it. I want you to try something for me. If there's no bars at all, that's a little concerning. And I'm not sure. Right click on your large chart for me, Lex. And there's going to be an option to reload historical data. Do me a favor, click that and see if that helps. If it doesn't, I'm probably going to direct you to Jason. Guys, look at that. To the tick. Fibonacci support. No trigger lines broke through. Isn't that amazing? Fibonacci resistance to the tick. Was there an opportunity in between these decision-making points for the Nexgen user to make money? Absolutely there was. This is what I teach every day, guys. Watch this. And if I put a high probability trend trade checklist on there, termination, let me change the color so you can see it. Termination creates a full reversal. Yes. Odds favorable momentum. Yes. I have not reached an area and I have cleared the previous areas. No terminations, clear path. Yes. Area for entry right inside of favorable large triggers. Guys, this one bounces right off the mid band inside of those large triggers. But here's the one thing that I want you to see. The window of opportunity was pretty big there. It may have gone all the way up to Fibonacci resistance inside of favorable large triggers. This is a higher risk trade, but this is a perfect look to get you down to the next key areas. And guys, that's what we teach every day. I want you to ask a million questions. I want you to go back and circle tails. I want you to practice this look. I want you to practice catching high probability trend trades when they set up. And I want you to practice sitting on your hands when the rules aren't met. Look at that, guys. I jumped ship for the lesson, and it went up, and it would have hit our profit targets. Isn't that funny? And now there's divergence on a 50-50 trade, which changes the scenario a little bit. Guys, this is your first hour every week, every day. Broken record over and over, reminding you that advantages create trades. We don't look for trades, we look for advantages. Right? I'm not looking for entries, I'm looking for trade rules being met. And that's the first hour. So I'm going to take a break. I'm going to stretch my legs, guys. Here is the break pick. Stretch your legs. I'll leave you with crude oil. We'll see what happens when divergence prints on a medium probability trade. And when the second half of the hour, for those of you that are brand new, the second half of the hour is me scrolling up to the top of my chat box and clicking on every link that you guys put in there, every picture that you guys put in there. And I want to remind you that everybody in this room is in a different place. Everybody in this room is at a different experience level. And everybody in this room should be trading their plan. And if you don't have a plan yet, then that simple plan is a great one to get going. But you will develop a plan. So if you see somebody doing something that isn't a high probability trend trade, it doesn't mean that their trade is wrong. It means that their plan is different than yours. But I will go back to each and every picture and we'll talk about advantages. Some of you have a plan that has you trading in determination conditions. Gives me heartburn every time, but that's a part of your plan. But we're going to talk about them as though those three advantages must be present. We're going to talk about the read on the chart, what we see, maybe ways to manage better, maybe ways to get in better, to get in sooner, to get out sooner. And every chart gets feedback. You are cordially invited, brand new users, to ask a question on someone else's chart, to take their lesson and turn it into a lesson for yourself. And I want you to get comfortable with the idea that the more questions that you ask, the quicker you're going to get there. The more pictures that you post, the quicker that you're going to get there. So guys, I'll be back in 5 minutes. Go stretch your legs, and we'll get into the second half of the day. I'm back. Let's start with Lex. Did you get over to Jason? Did you put in? Debbie says I was talking about patterns. Is this a pattern that you recognize? When a market's likely to continue down? And what charts are these? That's your 21 and your small. A lot of trend trades to the downside based on a larger chart, isn't it? Pivot stop out, goes all the way up to the mid band. Head and shoulders, not yet, but it has the potential, doesn't it? If it goes up from here, very much so. I don't understand all those patterns, to be honest with you. Um, I understand head and shoulders because John put it in the resource material and I teach it, so I had to learn it. But I know there's so many different patterns that people recognize in the market. There's so many different things, tails and these and those and that. And guys, I'm not gonna lie, I really don't understand it. And it's easier for me that way. I don't have the history of bulls and bears. I still forget which is which. Not gonna lie. But what I do know, and guys, what I do know is that, and that's what I think too, Alex. I think I'm very fortunate. I don't have any bad habits to break. I don't have any preconceived notions. All I have is what Nexgen has taught me, right? I understand momentum. I understand when the path isn't clear, and I know that when the path isn't clear, these things can create problems. So I get into these. Whoops, sorry. What was that? I get into these things where I don't worry about whether it's a head and shoulders. I don't worry about whether it's bullish or bearish. The only thing that I really worry about is what we see right here, is whether or not I have odds favorable momentum, whether or not I have a clear path, and whether or not I got to pull back to an area inside of favorable large triggers. And this is the only thing that matters to me, guys, and that simplicity. That simplicity absolves me of an awful lot of opinions. And without those opinions, I'm less inclined to break my rules because I know that my rules create a statistical advantage. So I'm going to scroll up to the top. Let's start seeing what you guys did today. Let's answer any questions that you may have. And then brand new users, the second half of the classroom is your half of the classroom. So I really want you to take advantage of that. Every time you post a question, every time you post a picture, it's literally like a private session for you. Safia got us going. Safia says that from a good bottom with a full reversal and odds favorable momentum, she's willing to take the pullback to the areas inside of the large triggers. And guys, this is a huge look, and this is a little bit of impatience, Safia. I see you there. Notice how when the triggers are split, it could go from the top, it could go from the bottom. Safia knows this well enough. She said it's likely to go from the bottom. She got in a little early to make sure she didn't miss it. But it turns into a beautiful trade. Guys, this is not a high probability trend trade. This is not a trade that's taught in the first hour, and this isn't a look that new users are going to catch in the first week. But Safi has done a tremendous amount of study, and because of the look on her large chart, she understands where it's likely to continue up, and she understands where all of her trouble spots are, and you can see that she takes profit right at those trouble spots. Safi, a beautiful trade. And then D-Rock. Oh, D-Rock, we found your pattern. It's getting better. Safia will never be satisfied. That's why we love her. Constant pursuit of getting better every day, which is why you're getting better every day, Safia. D-Rock, odds favorable momentum, good bottom, got caught on the gap fill again. Isn't that amazing? Don't be. Don't be. Exactly, it's the same mistake. Why? Because you're brand new, right? But it looks the same, doesn't it? So by repeating the mistake, by posting it in the room, by annotating the chart, you're going to avoid and be better about noticing these trades in the future more now than ever. I love that you wrote that on there. So, guys, what he's talking about on the gap theory, for those of you that are brand new, this is one way where we gauge. It's a pattern in the market. And the gap theory is simply if price accelerates away from your large triggers and hits an area, whether it's a mid band, we'll use it to determine if a mid band is a termination condition, if it hits a fib. But when it really accelerates away from those large triggers, it typically snaps back. So here you can see price accelerates right into the midband fast and far, and the large triggers are so far away that there's room for a full bar to print, which means that it's above the reversal bar marker. This is the gap theory, and it simply means no shorts in that gap. It means no longs in that gap. See, here's your white reversal bar marker. Here's your trigger lines below it. So the gap theory on this one is exactly what happened on D-Rock's chart. He had a great bottom. It created reversal. He had odds favorable. But look at the distance back to the large triggers. There was room for a full bar. And that's why getting in long here got stopped out before those large triggers were ever reached. So D-Rock, it's an awesome picture. It's a great realization. And guys, every time you make a mistake and you police it before I police it, it means that you're getting closer and closer to where you want to be. And then here we go. Odds favorable momentum with a strong top, strong triggers. The only negative was a price reach support before the pullback. Still has a little room to run at the midband, so took the trade with such strong momentum. Outstanding. Eventually, you'll learn how to break your rules with so many advantages. And D-Rock, that's exactly what you did, right? There's no divergence, there's strong triggers, there's tons of momentum, it's a tiny window of opportunity, and you said, I'll take a shot at this one. I know exactly where my trouble spot is, and I'm not going to get greedy. I'm just going to put a little money in the bank, and then I'll get there. D-Rock, outstanding. Two great pictures. And the cool thing is both of them broke a rule. Um, and only one of them won. Which is why breaking rules for new users becomes problematic, right? Because you don't know, you just lessen the chance. And then, guys, here is Ron. Ron is his own man. Ron loves a clear path. Ron is a huge fan of momentum. In this case, it's just a strong trending market cranking up. And he's created an opportunity for himself to just take little snippets in the middle. Gene, it's exactly what the name suggests. Your midband is a moving average, right, in the middle, Gene? Your outer band is a moving average on the outside. It's an extreme. I don't know the technical jargon for it and how it's created, but yeah, think of your charts when you look at a range chart divided into halves. The top half, the bottom half. Thank you for that, R. And then the top half and the bottom half are divided by the middle, which is your mid band. So they're just bands defining an area. All right, Ron got in, taking advantage of momentum, small little snippets. I wanted to say one more thing about Ron's trade, guys. Notice that he's not going for $1,000. He's not taking $700 or $800. Ron gets in with two contracts, and he makes $120 on each contract. This is a $240 trade in 1 minute. 4 of these a day is $1,000 a day, guys. That's a $5,000 week. Gary got the 50-50, no divergence, perfect entry, quick profits. Nicely done. I wouldn't call that a good bottom because your triggers broke through, Gary. When we talk about strong tops and bottoms, and I have to say it again, there's always going to be exceptions, right? There's always going to be exceptions. But in the beginning, yeah, let it be this. Let it be this look. Price reaches the area, none of the triggers break. It's a termination. And the reason I say that is because it's a termination that creates a full reversal. This is your best of the best look. None of the triggers get through, right? So that's a good one. I love it. Guys, the reality is that Fibonacci areas are in fact areas, and you're going to get instances where areas overrun a little bit, right? That's a pretty big overrun. Your large triggers even got below. It's a reversal. I'm not going to call it a strong bottom. I'm going to say it's overrun. All these divergences kind of confirm it, right? It was overrun, but my best of the best is always no triggers through. And just because I don't call it a good bottom doesn't mean that that's not an outstanding trade, because that's an outstanding trade. Your stop, though, Gary, it's a little ridiculous. You're leaving zero room for fluctuations at all. Not ridiculous, that's the wrong word. You are absolutely chumming the waters. I mean, you're saying, hey, give me just a fraction of a fluctuation and take me out and then finish the move, right? Guys, I love protecting equity. I really do. But if you are so convicted in the trade to take the entry, why not give it a little bit of room, right? Let it do what it's going to do. I see people moving stops super close all the time, getting stopped out, taking 25 trades in a day and making 25 ticks. That was my story when I started out. You've got to give the market just a little opportunity to run. And that's a trust thing. The more you trust, the easier it becomes. Oh, Safia, going back to your roots. High probability trend trade. Odds favorable, no terminations, pull back to support. Rockstar, Safia. Oh, you remember us. This is like when the movie stars come back to their hometown. Safia started in this classroom learning to read indicators, learning to take high probability trend trades, and has turned it into just an absolutely outstanding plan for herself. Nice job. They're still, I think, the best trades out there. I still think high probability trend trades are just, it's got to be the basis for what you do, right? Chris L., show me something great. Ah, look at you catching the momentum on the way up. Termination, reversing. It's not a high probability trend trade. You made the long trade based on smaller triggers hitting termination condition with large triggers remaining way above, knowing that the small triggers want to come back to the large in this condition. Um, Chris L., I don't know anything about the smalls wanting to come back to the large. But let's talk about what I see. Not a termination, and let me show you why. Not a termination. This is definitely a termination, right? So, Chris, the gap theory, things returning to the large triggers, is price returning to the large triggers. What you did here is you absolutely nailed a super common pattern that we see all the time. Let me show you what it was, and let me show you why what you did is so freaking smart. Do you see how price didn't reach this key area? Guys, I'm telling you, the people that move the market know about these areas. They want to get to these areas. And when it pushed back to this area and retested it, you noticed that the large triggers didn't follow. And you said, wait a minute, all of my triggers are way above support. This area is likely to stop the market. Doesn't this look exactly like the example from the manual that we talk about every day with termination conditions? And because they didn't quite get there, it's cool to create the expectation that they're going to try again, right? You waited for the immediate momentum to go up. The termination condition held, the triggers didn't follow, the small triggers turned up, and you take this awesome freaking entry that gets you to the right side of the triggers, that gets you on the winning side of the trade. I love it, dude. And your stop you probably could have held. That becomes a great target in the future. So is it a high probability trend trade? Absolutely not. Is it a freaking awesome read? Absolutely. And then at this point, you can use where the market is likely to go, maybe to catch a little more. But do you feel bad about $700 in a matter of seconds from a great chart read? You shouldn't. Outstanding work, Chris. And here's the deal, guys. If there's any of you that are doing this for any other reason to get paid, I want you to rethink your plan. The idea is to get paid. The idea isn't to see who can hold the longest. The idea isn't to see who can have the most aggressive entry and get in at the lowest point. The idea is to build that account. And Chris, that's a quick little snippet, man. And $700 goes a long way to having a steak dinner. Beautiful work. I love it. I get excited when you guys grow beyond the high probability trend trades. I get excited when your chart reading takes you next level. Just make sure that you have reasons for doing what you're doing. Gary, there's that beautiful trend trade. There's your first profit. There's your second profit. And you exited on Sophia's momentum long. Nice job. Getting out at the areas, right? Never go broke with that. Never go broke with that. And watch this. Here's Sophia's picture. Let's see if she took that entry where your exit was. Oh, she didn't. Maybe a different chart. Everything says up. There's that mid band right there at the triggers, and Sophia gets paid once again. Sophia, beautiful work. Gary, awesome job. And then Gary again, strong triggers. Everything says down. Why so late on your entries, Gary? Oh, missed your initial entry out of break even on the second divergence. No reason to take that exit, right? But great entries. Let's use this as a reminder. Great entries create manageable trades. Your entry was at 47, not 40. That's $70 less risk. That's $70 more profit. Missed it by a tick. It went through the lowest point of resistance. How did you miss it by a tick? Because you were scared to follow the rules for entry. So guys, the reason that the rules say, and I'm not picking on Gary, the reason the rules, Gary did this for the lesson for you guys. The reason we get in at the lowest point of resistance inside of favorable large triggers is because this is an angry, angry, angry market screaming to the downside with all the momentum. I just don't expect it to push up too far. Not with that much momentum. 2 ticks below this mid band. Guys, be willing to let the market go against you a few ticks. Be willing to let it bounce past your entry a little bit. Because what happens is it misses you. And when it misses you, you get into unmanageable positions. And you know you're in an unmanageable position, and your gut's going to take over and scare the crap out of you and cause you to miss the move down. Gary, I'm not beating you up on this one. You know the rule. Guys, you have to trust the rules too, right? Knowing them isn't enough. You have to trust them. The more variations you have on trades, the less likely you are to react appropriately when your rules are met because you're confusing them with other things. This is why simplicity is so key. Sophia, we saw that one. Beautiful. Gary, I think we just saw that one. Awesome read, right? And then that one's in at the area, and look how easy it is to manage. Great job, dude. This is what we call the recovery. Nice job, Gary. That's awesome, dude. Odds favorable, everything cranking, gets in at the area, gets out at the first trouble spot, and gets out with the second divergence on a 50-50 trade. Gary, I could teach a class on trading 50-50s with this picture. That was outstanding. Beautiful management. Great entries create manageable trades. And I think that the great thing, and Gary says he's trying to post all the trades, the good, bad, and the ugly. It's not even that this one is ugly, right? It's just a learning tool. This is all of us. All of us are going to make mistakes, even when we are this good. All of us are going to do this from time to time. Guys, be cool with it. Learn from it. Remind yourself that rules keep you safe. Rules put you in the right direction. Gary, outstanding trading. Everything says down, odds favorable, no termination, pull back to a midband inside of favorable large triggers. You were just a little bit late. Or were you a little bit early, Chris L? It didn't get you, did it? But it sure came back. That's fear of missing out. This is the market not giving you your entry and you saying, oh my God, it's going to go without me. And jumping in. I think we talked about this one. That's okay, though. All you did, Chris, is you paid a little extra to make sure that you didn't get missed, right? Because your stop was still clearly in the correct spot, which means that you still got into the trade, you held the trade, and you got paid. Nice job, dude. Great trading. And guys, you don't know this if you're brand new, but Chris is brand new. D-Rock is brand new. A lot of the people showing us these outstanding entries are brand freaking new. And all they've done is keep it simple. All they've done is learn to read their charts, to follow a simple plan that creates an advantage. Gary, once again, outstanding. Your large chart told you where to exit. You gave it a chance to run. But look at the entry. Rockstar. Great entries create manageable trades. Hey, Lex, were you able to get your charts going, man? Gary's killing it today. He's following rules. That's the only thing that messes up days, guys. John Novak and I talk every day. Do you know when I lose? I lose when I break my rules. When I follow my rules, guys, I have outstanding days. I hit my profit targets without. All right, Lex. Dude, I'm sorry for your challenges today. Um, One thing with NinjaTrader 8, and I'm sure that they talked to you about it, but just in case, before you open it back up, Gary, it does follow trend trade rules, but the entrances are different. The entrances require a little different approach, in my opinion, to avoid getting run over. Lex, there's the NinjaTrader 8 best practices. Going through and deleting the cache and tick stabilizes it. Getting rid of the temporary files. There is a challenge with it that happens occasionally. It's pretty rare on my computer these days, thank goodness. But there's your best practices. I just put it in the room, and that'll help you a lot as you go through. And then John Novak has a team of programmers working on trying to fix everything too. All right. And then, Chris, let's talk about your last trade here. And this is just me, and I have to do this for the class. You fought the trend, and you fought momentum, right? And there is no gap theory. Your large triggers aren't a full bar away. So you traded hope, and you got rewarded for being lucky, right? And look at that. You tried to enter short down here, way down here, against everything. And then you held through a tremendous amount of nonsense. Fantasy patterns. Oh man, I'm stealing that. Fantasy patterns. But you understand why it was a challenge, right? And you were gambling without the rules. And Chris, it's totally cool that you did it, guys. It's okay. You're going to do this. You're going to form opinions and you will trade them. And the most important thing to do is to go back and remind yourself that you were trading fantasy patterns. That is so going to work its way into this classroom. And I think that my favorite part about this is that you still posted it, Chris. You know you made a mistake. You know you fought the rules. You know you forfeited every advantage known to man. And you still said, hey, you know what, guys, check it out. I just showed you two awesome trades. I make mistakes just like the rest of you. We're all human. And it's okay, right? Never any reason to beat yourself up, guys. I won't beat you up. I expect you to not beat yourself up, too. Everything says down. Was this Dano? Did I see that right? Let me see. Dano, why didn't you like the look? You got scared when the fibs crossed and you got out with a small loss. First of all, Dano, you with me? These are triggers. These are fibs, right? And I'm not going to tell you how to feel because that's not my job. But I want to show you how to feel a little more secure. Are you ready? You're going to love this. What was the direction, Dano? Down, right? I'll answer it so you don't have to type. The momentum was odds favorable, and it was beautiful. And the path was clear, wasn't it? So your large chart identified direction, your large chart identified momentum, and your large chart gave you a clear path. Your large chart leads the way. The large chart is the engine. The large chart tells you to look at a smaller, faster chart for an entry. And this is the part that escapes new users, and it got away from me for a long time, is that the entry chart is just that. And your entry is beautiful, man. Your entry is solid, rules-based, outstanding. And let's take a look at something, right? Because on an entry chart, Dano, these triggers are probably going to turn against you. If they don't, we'll never get back to that great spot. Does that make sense? That's the first thing that I want to let you guys know. Is that the small triggers on your small, tiny, itty bitty, insignificant entry chart, they will cross against you. But this is how I learned to manage trades, Dano, because I'm not going to lie, dude. I had the exact same issue. And I'm going to start with this. When you entered the trade, you entered because everything here was perfect, right? That's what got you in. And this simple two-word phrase helped me with management. When this divergence printed, what changed on your large chart that leads the way? Absolutely nothing, right? All of your advantages are still present. Everything is still in place. When price fluctuates in here below a midband inside of favorable large triggers, what changed on the large chart? Absolutely nothing. And this is what used to help me out a lot, Dano, is I used it for the entry and I put my stop in place, and then I almost in my brain started saying, well, what changed? Wouldn't I still take a short trade with this look? Wouldn't I still enter at a mid-band inside of favorable large triggers with this look? Does that make sense, everybody? If I didn't have this entry, this perfect entry that you took, doesn't this one fit the rules for a high probability trend trade? Absolutely it does. And then still, doesn't this one fit the rules for a high probability trend trade? Absolutely it does. And Dano, for me personally, and I love that you posted this picture because, dude, you're not alone. And I think that if everybody put their hand up, we've all done this exact same thing where we've taken an exit out of fear right where the rules were meant for a high probability trend trade. I may have done it as recently as last week when you get in the moment, right? And the adrenaline goes. And this is why posting the pictures is so important, because now we get to stop it. We're out of the trade. The adrenaline's gone. The emotion's over, and we can talk about it. So, Dano, what I want you to do is I'm going to annotate at the bottom of this, and I'm going to put, if the rules are still met for a high probability trend trade, I'm not going to exit at an area inside of favorable large triggers. And this is what I had to tell myself. If the rules are still met, I'm not going to exit an area inside of favorable large triggers. And Dano, I could probably go back through the 7,000 pictures that I have and find at least 200 instances of where I did that. So I'm certainly not coming from a pedestal on this one, guys. I've done it, and this is a very common mistake. And two divergences are an termination condition. So I think it's an awesome picture, and I think that the biggest victory is what an outstanding entry, Dano. What a beautiful no hesitation get in at the spot entry, allowing you to reduce risk, which makes it even easier to start trusting the large chart. Great picture, dude. Thank you for that. Gary had the gap theory. Gap theory doesn't happen on the small chart, Gary. Gap theory happens on the large chart. Um, and here, you're just guessing. Because with the loss of momentum and everything above, Gary, is it going to stop here? Is it going to stop here? Is it going to stop here? And I know that there's just, without a 55 chart with odds favorable momentum and nothing in the way, it's just a guess. It's just a guess. So I like that you didn't take it, but it did have odds favorable momentum, and everything was up. It's just a super high risk trade. It's a hope trade. And contrary to popular belief, hope does not float. All right, Safia. Everything says up. Safia, did you break your rule a little bit on this one? By getting in below the fib rather than on the business side of the fib? Nope. That's a trade for you? Okay. It's been a while since we've talked about your rules. Great job. Momentum and go. Solid work. Great chart reading. There was a pullback, but wasn't it directly into a fib? You used to take it on this pullback when the area cleared. But you may have adjusted a little bit. It doesn't matter what you made. I'm just asking if is it different? Did you change it? Just so I can keep up with your plan. Like that's your entry there. I recognize that one very much. Right? That's the Safia entry right there. Breaks, pulls back. It just looks different. And so guys, when you post pictures in the classroom, if I notice a discrepancy, when Ron posts something that doesn't fit his rules, I freak out. I have an anxiety attack. I call my therapist. And Safia, you've been so consistent that I just like to go, that doesn't really look like what I'm used to seeing. That does. And I know that you were late to the party. So it's never an attack on you. It's always just, hey, I recognize patterns in people. I just want to make sure that you're being consistent. All right, PFI, NASDAQ Momentum Research. I love it here, and I love that you got out at the fib. So PFI, that's solid, dude. That's getting in with momentum and getting out at the area where it has the potential to end. And then the verifiable loss of momentum, you get out, right? And then the momentum goes away, right, PFI? The smalls work their way inside. The smalls work their way inside. Are you with me? I don't know what a continuation trade is, but I know that you don't have momentum to take the trade here. So taking a momentum trade, which is what this is, without momentum, typically results the way it did. Does that make sense? Here you have odds favorable. Oh, I hate the word okay. Here you have weak triggers. Here you have a market that's likely to continue in the direction of the trend. Here you have anything that can happen. Here, when you just jump in before the trouble spot, it carries it easy. Here, without the momentum, anything can happen, anything can happen. Anything happened and pushed you all the way back to support. Does that make sense? And then when you come all the way back to support, you don't know which one it's going to be, so you wait for a close on the correct side of the small triggers because everything here still says up because of the location of the large triggers. And when it pulls all the way back up, you get out of the trouble spot, and then when it closes back below, you get out again. So PFI, outstanding. Great chart reads. And I love that you're on sim, and I'm not going to lie, I want to hug you through the monitor right now. Research your entries too, because momentum trades without momentum, guys, it's right there in the name, right? It's like saying I'm having a ham sandwich, but you're eating turkey. It's not true. You can't have a grilled cheese without cheese. So this is the one that's going to have a typical result every time. This is the one that sets you up for this one. Does that make sense? And that little omission of that one that takes the money out and that stick-to-itiveness that gets you these rock star trades, dude, that's how you make money. Safia, I might be a little hungry right now. And I do love a sandwich. Great job, PFI. Great job being on sim to practice, too. All right, D-Rock, you said you're not happy with this one, but you took it. It helps when you look at it and hold you accountable. I love it. The sting. So let's see. Let me see where you got in here. That's 844. It's all the way back here, right? So there's a lot of information. So we're coming right here. You are coming through divergence, so there was a slowdown. Odds favorable momentum, I like it. Smalls are through the area, I dig it. Gap theory's not in play. So this becomes a 50-50 trade on this fib, right? So far we're up to speed, right? Large chart says this area has the potential to break. Are you with me so far? And it's not a good top because it's not coming from an area. So let's see what happens. You do get a divergence. So on a 50-50 trade, D-Rock, I'm not going to lie, it's a good look, man. And let me show you the progression using the simple trade plan. Let me show you the progression on this trade for most people. No, you shouldn't. In the beginning, that's it, right? That's your trade. Divergence, no trade. And that's the one that's in place to optimize, to get you the highest chance of success with it. Guys, I'm going to show you how your 50-50 trade is gonna progress. You're going to get to the point, D-Rock, that if you have a good top or bottom, if you have a termination that creates a full reversal, you might be willing to sacrifice divergence. Does that make sense? You may get a little flexible when it's coming from an awesome termination condition. And on that same term is if you don't have a good top or bottom, then you're going to insist on no divergence, right? So in the beginning, like having a strong top and no divergence, that's the most advantageous look, right? That's your best chance. But as you grow, you may say that if this were a termination condition, I'll take that with the divergence. So right here where we have a pivot stop out, or just a double top really, but two divergences, same, that's textbook term. This 50-50, you might say even with a divergence, hell yeah, I got it, because look where it's coming from. Does that make sense? I don't think you should feel bad about this trade at all. I think this one had a lower chance of winning, but your entry is perfect. You didn't risk a ton. And now we've got a great lesson on those 50-50s. Now we got a great lesson on moving forward. Don't ever feel bad about trades on simulator, guys. Don't ever feel bad. Embrace the lesson. Sorry, there wasn't a lot of sting in that one, was there? I'll be mean to you later, I promise. All right, Alinsky rolls off the tongue. Large chart says down. Large chart says clear path. Small chart said area inside of favorable large triggers. Alinsky, did you put your entry up here at the fibs outside of the favorable large triggers? At A, on the wrong side of resistance inside of favorable large triggers? I'm trying to diagnose so we can have the conversation. And I know that you missed it, right? So with this look, tick or two below, man. Be willing to spend the money. That oh, you just got warned. Did you see that? We're not allowed to swear in here. I can because I have a microphone. You can't because there's all these little robots looking for you. Awesome trade, dude. Awesome read. Everything is solid. Everything is beautiful. Everything that you want. And the only challenge is that you tripped over pennies and you missed all the dollars, right? My brother used to say that to me. I would put my entry right here, and the market would do exactly what it said it was going to do. And my brother, Mark, you're tripping over pennies to save dollars, man. You're tripping over pennies. You're missing all the dollars. And then Alinsky, and I had somebody point it out yesterday via message. When I'm talking in class, I'm always identifying the area of resistance. I'm talking about those lines specifically. But a couple ticks below, guys, in my own personal trading and most of the people that you see trading it, and I say this every day, a tick or two below the resistance, a tick or two above the support, because things are absolutely cranking here, and we don't expect that small crowd to get that full push. But we're willing to accept a few ticks against. Does that make sense, everybody? It's a perfect look, Alinsky. You named it, you nailed it, and there's a beautiful lesson in it. Solid. Sometimes NASDAQ, PFI, but yeah, I'm talking about the ES and crude oil. And guys, I say this 1,000 times every day. The NASDAQ has a different set of circumstances for entry. The NASDAQ has the same principles, but the NASDAQ is the angriest ex-girlfriend you've ever had. And she's coming at you with a bat. And if you're not quick and calculated, she's going to knock you upside the skull. Beautiful, beautiful read. Great lesson. Thank you for posting that. And then Alex G. Alex G, I absolutely love how focused you are these days. Odds favorable, no terminations. And Alex, you got lucky on the wrong side of resistance, right? Same lesson that we just talked. Guys, it's okay to pop in a tick or two below. Keeps you from having the regret. You take quick profits, second divergence takes you out. And then, Alex, I hope you were in the lesson earlier today. Your rules for a high probability trend trade are still met. 100% at your second exit. Your second exit is right at the entry for your add-on contract. Does that make sense? And does that make sense to everybody in here? In the moment, you're probably not going to see it. But if you go back and look at it when it's not moving, thank you for saying no, Alinsky. Let me show you. Can we all agree that this is odds favorable momentum, absolutely no termination conditions, and a pullback to an area inside of favorable large triggers? Absolutely, right? Alinsky, isn't this odds favorable momentum, no termination conditions, and a pullback to resistance inside of favorable large triggers? And this is normal. But how? No, I think that's great that you always enter with 5-1 odds favorable momentum. And what I'm saying is that when the rules are met perfectly on a large chart, when they are without question 100%, oh my gosh, this is the best look I could ever have, this second arrow is very much an entry. It is a rules-based entry because the only termination condition on a smaller chart is three divergences, and we only had two. Does that make sense, everybody? And Alex, your plan may be different, of course, because it's your plan. It's not my plan. So, Alinsky, if you miss this one, you're going to get to the point to where you say, holy smokes, my rules are still met. These guys still want to pay me. You still have a pivot. You still have a rules-based trade. And then as you grow with it, and I think we're talking to D-Rock yesterday, if you get in two contracts in here and you take that quick exit and make some money, when it pulls back, this is where my veteran traders come in and they put it back on. So they made money down to here, and now they're just double dipping when the rules are still met. Does that make sense, everybody? Dano, so when we talk about termination conditions, thank you for typing that. When we talk about termination conditions, do you remember what the only termination condition on a small chart I'm wrapping my arms around and respecting? The only one on a small chart, there it is three divergences. One, two, three divergences. Three losses of momentum on a small chart is the only thing that'll keep me out of a trade when my large chart says go. Guys, give me a Y if you're with me on that. One-to-ones don't scare me. One fib doesn't scare me. These are awesome spots to create the bounce back to the best of the best spot. But when that third divergence prints, I'm not looking for that midband. Or if I got the best one, I'm managing out. So when we look at this awesome trade by Alex, two divergences doesn't kill a trend. It creates just enough stutter to get you back to that entry if you missed the first one. Beautiful trading, Alex. Outstanding trading. Awesome look. And guys, there's just another one. There's that great lesson to get you one step closer, to find that little extra. Debbie's been around long enough to know that two divergences doesn't kill a trend. Isn't that cool how a little bit of experience you can see it, right? It starts off, and I love the progression. This is beautiful. It starts off, I'm brand new and I missed it. Son of a gun. And then it progresses into, oh, wait a minute. I could have held that one a little longer. My rules were still met. And then ultimately, guys, that's a natural progression. Three different users, three different levels of expertise. The exact same trade. Is that amazing? Or this is the stuff that excites me as an educator. This is the stuff that gives me goosebumps and tingles. It's not the same market. Nope, it's not. Same pattern though, isn't it? Tell me a difference between the two. It's the exact same pattern. The patterns don't know what market it is. Isn't it still odds favorable? No terminations? Isn't it still one divergence on the pullback to the midband inside of favorable large triggers? And isn't it still a second divergence pulling right back to the midband? Whether it's the S&P or crude oil, guys, it's the same trade. The patterns don't know what market they're trading. Thank you for pointing that out, though. It's not the same market. I was absolutely tricked because I didn't even look at the prices. I didn't look at the markets. I only looked at the patterns. But doesn't it still hold true? Isn't this pullback that would have created an exit still an entry for a high probability trend trade? It is the progression, guys. This is the direction that you're heading, and every day you get one step closer to it. And you will never stop learning. I love that. You will never stop learning. You're going to look back a year from now and be like, oh my gosh, it's amazing. NASDAQ momentum research. PFI, what's the number one thing that you need for a momentum trade? Momentum. You have it on the large chart, right? But you don't have it on the small chart. PFI, what kind of trade is this? Odds favorable, smalls through. It's just a trend trade. That's all it is. But you're calling it NASDAQ momentum research, right? It's a trend trade, right back to an area of resistance inside of favorable large triggers. It's a 50-50 trade, and you're out at the trouble spot. There's no optimally. That's what it is. And guys, this is why when you chase too much stuff, Safia loves this term, you begin to bastardize the rules, guys. You start changing everything and blending them together because you're giving your brain too much to think about. This is a late entry on a beautiful 50-50 trade. That's a perfect exit on a 50-50 trade. And then that's a shot at momentum that didn't work. Does that make sense? Entry at reversal bar on pullback into large triggers. So you waited for the correct side, right? I dig it, PFI. And the momentum trade came from up here is what Safi is telling you. Sort of. So, but this is where having set rules, right? This is where having set rules makes it repeatable. And that's the only thing that I want to get out of this one is knowing what you're doing so that you can do it over and over. Knowing why you do it so that you can do it over and over. Guys, rules have to be repeatable. I know you're in a research phase, right? But you need to go back and you need to annotate this. That this is a 50-50 trade, right? And your entry's at the mid band. And your target was beautiful. Because then what you can do, PFI, is every time this look repeats itself, you don't confuse it with a momentum trade. You know exactly what you're taking, you know exactly how it needs to be managed, and you have a pragmatic approach to it each and every time that it happens. Does that make sense? I'm not knocking the trade. I love it. I love everything about it. I love what you're doing. But the idea is that everything that I do is repeatable. Everything that I do has been proven to create a statistical advantage. Everything that I do is testable. And guys, I should be able to have this set of rules for an entry, and I should have 10 identical pictures of that entry long, 10 identical pictures of that entry short, right? And there has to be an if-then scenario for each trade on the management. And this is how you get to where you want to be. I used to drive Safia nuts. Safia, simplify, focus on it, and master it. And Safia finally told me, fine, Mark. And she said, I'm going to kick the hell out of the momentum trade. And I actually sent this to Safia, and I said, do this. And she did it. And Safia, you're one of those people that other people look up to in this room now because you're so damn consistent. And I'm so proud. Joel, right into that termination, right? I can't drive you nuts, live close enough to walk. Post what in the room? That fill in the blank? Is that what you wanted, Ron? Joel, do you notice that you didn't even fill out your checklist? No. Oh, Gary said post that in the room. Sorry. That one, Gary? Debbie, have an awesome day. Thank you for being here today. Joel, do you know when I don't annotate charts? When there's a challenge. But let's look at it together, can't we? It's right above you now, Gary. They were eking through, man. And I like your thought process on this, Joel. I really do. They were eking through. And this is where when I teach 50/50s, I love to use the phrase smashing through areas, right? And this is just for me. I see this one lose more than it wins. Because, and let's just talk about the whys. Because Joel, first glance, I love this look. I'm not going to lie. First glance, I love everything about it. And then what you're going to be able to do in the moment. Let's talk about why 50/50s are potentially problematic. Um, because fibs are where reactions happen, guys. And I say this a lot. Fibs are where buyers and sellers have to make a decision on what they're going to do. Buyers and sellers. Am I going to take profits? Am I going to hold the position? Am I going to enter a trade at this key area? So we use the trigger lines breaking the area to give us an advantage because the further things smash away from an area, the easier the trades become. Wouldn't you guys agree that the further away from fibs trades happen, the easier they become, right? Because we're not in these decision points. When it's wide open, the buyers and sellers don't give a crap. They're just going with momentum. We rely on the small crowd. So when we start getting real close to these areas, and guys, this isn't even about your trade, Joel. This is a great lesson and something to think about going into fibs. Fibs are where reactions happen, and the further we are from them, the easier your trading becomes, right? So when I talk about these 50/50s, and let's use this. And I think in the moment we were talking about it. This reaction area hasn't broken. This reaction area hasn't broken. This area for reaction is still not broken. And this area for reaction still isn't broken. Guys, there are four very key numbers, very key spots where shit can go haywire. Pardon my French. Does that make sense? When you start thinking about termination conditions, when you start thinking about 50/50 trades, does it make sense that we're now in four areas where buyers and sellers might ruin the party? Joel, you had the best momentum ever, brother, and you gave yourself the best chance of success taking in this trade with no divergence, right? With a little window. And if you're going to take this trade, man, that's the way to take it. But I think just a little bit of why fibs are so important helps this one. And then what D-Rock said, we're not coming from a good bottom, right? The sellers were killing it to the downside. And the buyer said, let's go this way. But they came into an absolute flood of decision-making areas, guys. Four different lines where sellers were locked and loaded, ready to finish the push. And I'm just telling you this because this is my own experience that hopefully pays dividends for you guys. I love 50/50 trades. I really do, and I'm not afraid to take them. But my ideal 50/50 trade, let me share with you. I love to share, guys. I will give you every secret that I have, I promise. My ideal 50/50 trade, let me see if I can find one. This is my ideal 50/50 trade. The large trigger is almost through. My entry is at the area that's now behaving more like resistance than support because everything has smashed. Guys, this is the one that I'm like, you couldn't pay me to not take this one. Even this look, I love it if it's coming from a key area, if it's coming from a good bottom. Because look what happens when it's a bad bottom. They push back at these decision-making areas. And now we're going to see bad bottom to the mid band. There's your fight. Pushes down. Bad bottom to the areas. Again, pushing down. Now we have odds favorable momentum. Now we have no termination conditions coming off a termination that creates a full reversal. If I get a reversal bar, guys, I've got a rules-based entry right about here. Odds favorable, clear path. Joel, you guys make me a better trader every day. Every time I'm forced to look, not forced, that sounds horrible. Every time I look at a chart that isn't moving. Guys, so every time I look at Joel's chart, I have to process through my head and take a chart read and turn it into a scenario that's understandable for you guys that are learning to read the software, right? Every time I look at this chart, I have to turn it into a teachable moment. Every time I look at this chart, I have to turn it into a teachable moment. I have to look at advantages and I have to look at disadvantages. And what is that doing for me, guys? That's telling me that every time I look at a chart, I have to relate it to advantages and disadvantages. This is why I ask you to take pictures. This is why I ask you to annotate pictures. Because you're doing the exact same thing that I'm doing for you. And I think I told someone in this room once, I could hand you a microphone. Jose De P, Bobby T, Safia, David B. If I gave you the microphone right now and asked you to describe what happened here and whether or not it fit the rules and what the advantages were, give me a Y in the room if you think you could do that with this still picture. Anybody think they could do that just looking at a still picture? Safia, I know you could. Bobby T, I know that you could. Mark SP, you could. Dano, you could. So guys, the key to success becoming a day trader is being able to take this picture that isn't moving, ingraining it into your brain so that you can recognize it when the picture moves. Does that make sense? To recognize it doing nothing, to annotate it doing nothing, to stare at it with zero pressure, so that when the picture isn't moving, you can identify it to the point to where you can catch it when it's in motion. These one-to-ones represent the top of my window where this market is most likely to continue. The reversal bar had me looking. The mid-band is the lowest point. My stop is where the market shouldn't go. My entry is where it's most likely to continue. My profit target is at $100. My second profit target is at $200. And as I become a chart reader, I'm more inclined to believe that this market's going to make it to the fib. I can see that they've already tried twice and been stopped in their tracks. So at this point, there's nothing for me to do unless a third divergence prints. It's either going to make it or it's not. I'm not in control. Buyers are pushing up, sellers are pushing down, but sellers have the advantage of momentum, sellers have the advantage of a clear path, and sellers have a target that they haven't been able to get to twice. Am I guaranteed to win this trade? No. Does it have the advantages that I look for to take a trade? Where's my picture? Do you guys see how I do this? It's pragmatic, right? It's methodical. It's not a 50-50, Safia. It is wide freaking open. This is my area. A midband is only a termination condition if the large triggers are a full bar away. Guys, this is a termination that created a full reversal, that gave me odds favorable momentum, that gave me a clear path, that pulled back to an area of resistance inside of favorable large triggers, that gave me a reversal bar to reduce my risk above. And now there's nothing for me to do. It's either going to get stopped out because the buyers decided to push back, or it's going to hit my first target, at which point I'll take profits. But there's my first profit target. New users may go break even, right? Experienced users may say, but Mark, your break even's right at an area of resistance inside of favorable large triggers. So the experienced user may say, you know what? I'll keep it above the reversal bar. Or I'll go break even. And it either hits me or it doesn't, right? It's pragmatic. Give me a why in the room if you see it. Give me a why in the room if you recognize that the rules were met, that the entry was where the market was most likely to continue. Give me a why in the room. If you believe in your heart of hearts that the methodology is pretty kick-ass, the only thing you have to do is learn how to recognize it in the moment. Guys, I've already got $100 in my pocket. I have no risk on the trade. Momentum and direction says that it's likely to hit this area here, but the reality is I already hit my $200 target if I'm brand new. Because that was right here at 09. So the brand newest trader made $300 on this trade, and now they're sitting on their hands and doing nothing. The veteran trader is saying, I triple dog dare you to pull back to a mid band inside of favorable large triggers. I triple dog dare you to do it because I'm going to add on with odds favorable momentum. I'm going to take that high probability trade from a termination condition. And you want to know how you hit your second target, guys? Put a limit order just below the mid band. Does that make sense? Guys, all I'm doing right now is taking chart reading, right? All I'm doing is taking my ability to read my charts, my ability to see advantages, and I'm capitalizing on them. I'm capitalizing on the hard work of the large crowd. All you have to do is do it enough to trust it. Guys, there's your $200 profit again, right? That was your $200 right there. That's a $300 trade. Who cares what happens next? But my indicators say that support's a pretty solid guess. That's where the market's likely to go. But is anybody bummed about $300? Is there anybody in this room that would be pissed off if it hit that fib? I hope not, because $300 goes a long way. And guys, people always say, well, why don't you trade live, Mark? Why don't you trade live? The reality is because you guys absolutely hate losers. And if that would have lost, all of my people on demo would have said, well, Mark's full of shit and this doesn't work. They won't do the study. They'll base it on one trade. We have to base it on 100 trades, right? We're fuzzy here. Let's see what you have. All right, A. You went long because of odds favorable momentum? And this is real hard for me to read, so let me annotate it. For whatever reason, your chart came through super fuzzy. Is this where you got in? Help me out, A. Who is A? I don't know what the name is. All I can see is the letter. Oh, hey, Ali. Welcome to the classroom. So just so that I'm clear, these two arrows line up, yes? It's a little fuzzy, but it looks like that's it. So you had odds favorable momentum. I love it. Rule number one is met. You're trading with the trend. I love it. So Ali, I noticed that you put the small triggers are above the area. This is awesome recognition because what it means is that you already understand the rule. You already understand areas with the potential to break based on trigger location. Outstanding, Ali. Here's the one thing that I'm going to have to do, though. You ready? We're using those trigger lines and areas on our larger, slower chart. We're letting the larger, slower chart define our areas. And what we had here is a textbook termination condition. Price reached the area, the triggers didn't break, so you're trading into an area that has the potential to stop the market. But you're doing it with a lot of momentum. And your entry, I love that you use the mid band. So I'm going to go into rule number 3. At the time of the pullback, from the top of your triggers to the bottom of your triggers, and we look for areas inside of the trigger lines. Does that make sense, Ali? And I'll tell you what, for your first trade posting in the class, this is pretty outstanding. So instead of taking the entry up here, the rules-based entry is right here. Creates a considerable amount of less risk. And what it also does is it gives you even more room to hit your profit target, and you nailed your profit target too. Does all of that make sense? You took a trade without the advantage of a clear path, but because of the momentum, because of the rock star entry, because of the great stop placement, and because of your ability to understand what might kill the party, this is a beautiful trade. It's a calculated risk. And I love it. The execution is amazing, Ollie. So now all we have to do is just rinse and repeat, right? But I am going to tell you, trading into that termination condition is going to work less than it works. Momentum saved your bacon. And notice how all that momentum carried it back up for a retest, at which point it pushes lower again. Solid work, dude. Welcome to Nexgen. Welcome to Nexgen. Did momentum? Oh, look at that. Didn't we identify where the market was likely to go? Guys, whew, name your children after me. I'm kind of a big deal. Just kidding. Termination, 50-50, perfect entry. Money, money, money. Way to get paid, Gary. Way to get paid. Chris T, make me proud. Odds favorable, nothing in the way. Pull back to support inside of favorable large triggers. What do you say we get paid today? Chris T. Chris is like, you know what, Mark? I'm going to post one trade every week, but it is going to be so chock full of awesome, you're going to love me for it. And that's exactly what happened. Chris T. Fibs in the distance with all that momentum. We're going to get more out of that one eventually, right? I know that that was just a predetermined target. But now you're going to get to the point where we start trusting a little bit. Let that large chart lead the way. D-Rock, I'm always a couple ticks above or below because they're just areas, right? And there is nothing more frustrating than having a fib for a target and it missing it by a tick and going the other direction. That's all right, Chris. 75 to 81 is $200, isn't it? 4 points, $50 a point. And then you just capitalize a little bigger, going the other. That's awesome, Chris. Everything about it's beautiful. And then Joel, let's see what you did, my friend. Ah, Joel, it doesn't want to work. I'm going to try clicking it again. Here it comes. Anticipation. Alinsky with the Aggies on there. Are you from Texas, Alan? A lot of Texans in here. Hey, Joel. Beautiful. Toronto, Ontario. I think we have another Toronto guy in here. Beautiful, Joel. That's the one, isn't it? So, guys, I'm going to ask a question. Can you do this? No, you're okay, Christy. Joel, can you do this? Heck yes. Joel, are you going to screw it up every now and then and make a mistake? Heck yes. Guys, forgive yourself the mistakes. Forgive yourself. Understand that they're lessons. Joel, this is outstanding. And this is a beautiful recovery. We didn't spend any time feeling sorry for ourselves. Got back in the saddle and kicked a little ass and made that money back. Great job, dude. Ron says he's done. What does that mean? That means Ron had odds favorable momentum and no terminations and took money all the way down. Nice job. Not many setups today. You had to increase your contract. So 8 contracts. Guys, that's an $800 trade using momentum and a clear path. Ron's stubborn. Ron says, I'm not taking your high probability trend trades. That's not in my plan. Can I tell you guys how awesome I think that is? Ron understands the high probability trend trade 100%. Ron spent time learning it to read his indicators. Ron's plan doesn't include it. And you'll see Ron every day skipping this trade because he's like, I don't need all the money. I only need my money. And my money is enough to live comfortably on. My money will buy a chili dog. Safia, chili dog, not chili hot dog. Get it right. Cheese and onions, baby. Ladies and gentlemen, this is what we do every day in the room. We talk about victories. We talk about advantages. We celebrate lots. And then when you need a little nudge back in the direction, I give it. Alex G. Beautiful. And I'm telling you guys right now, it's no accident that so many people are taking the same trade because the pattern has been proven to win more than it loses. The pattern provides a statistical advantage. Lex, all you have to do, my friend, is a little bit of study, a lot of feedback, and get to where you recognize the pattern. We see it on these charts and we watched it live in the market happen. Alinsky, all you have to do is dedicate yourself to studying the pattern. Ali, all you have to do is dedicate yourself to studying the pattern, to posting the pictures, to finding the best of the best. And it's not going to happen in a day. It's probably not going to happen in a week to where you're comfortable, guys. Recognition comes through repetition. Hey, Ron, have an awesome, awesome day. Wait for the pattern. Believe in yourself. I'm not going anywhere. That's my promise to you guys. Unless I get hit by a bus, I'm going to be here every day talking about your successes, celebrating them with you. I'm going to be here every day reminding you that termination conditions are a killer. And Alex, you took the same one Joel did. But Alex, you didn't post that one in the room. Post everything, guys, wins and losses. And Alex, I know that you went back and you know how to police yourself. But post your losses in there too. And if nothing else, it just reinforces that your rules are pretty awesome. When you break a rule, post it because we'll talk about it and everybody learns that following your rules is a little bit awesome. So that's it for me today. I hope you learned something. If you're brand new, I hope it wasn't overwhelming. I promise you, every day, clarity ensues. Every day, it gets a little easier. Every day, you're going to get a little closer to your goal. Promise. And if you don't, we'll figure out how to say it a different way. Sometimes I have to do that. So, guys, have a great day. Get on board, call your salesman, commit to the process. Just buy the software. You know it works. Just learn how to work it. I'm not a salesman. I don't even like saying that. Call your salesman. They'll talk to you. Guys, be good. Take care. Don't sit in front of the computer for 9 hours. Give your eyes a break every now and then. And I will see you tomorrow morning at 9 a.m. And we're going to do it again. Take care, everybody. Be good.